should modernize the insurance fund. They should protect mid-sized banks so small businesses can leave their money in the small bank.
여러분 안녕하세요. 안녕하세요. 뉴스 읽어주는 여자입니다. 조원씨 벌써 들어가셨네요. 안녕하세요. 제가 오늘 좀 바빠가지고 방금 집에 들어왔는데 들어오자마자 그 라이브 시작하기 전에 타이밍을 봤는데 지금은 너무 괜찮은 타이밍 같아서 바로 매수로 들어갔어요. 근데 오늘의 주식 차트 보니까 이게 무슨 수락상이야. 진짜 너무 어제보다 훨씬 더 변동성이 많았어요. 진짜. 네, 오늘 일단은 롱으로 갑시다. 보고 있었는데 여기 타이밍이 딱 괜찮지 않아요? 그때 딱 들어왔어야 되는데 그때 좀 바빠가지고. 근데 일단은 그냥 지금의 타이밍이 좀 괜찮은 것 같아서 조금씩 천천히 이렇게 수익을 좀 보면서 하면 될 것 같아요. 오늘은 기업 실적들 때문에 왔다 갔다 할 듯. 오늘 혹시 오늘도 롤러코스터 타나요? 근데 어제는 사실 어제 너무 힘들었어요. 멘탈적으로 힘들었어요. 언제 들어가야 되나? 어제 진짜 너무 변동성이 큰 그런 날이었어요.
But like you said earlier too, Lisa, which is all we need is non-chaos for these stocks to go up because there's been so much bad news in them. My favorite stat of yours.
아니요, 갈아입었어요. 갈아입고 좀 다 했어요.
Isn't that amazing? It's amazing. And you know, so we're talking about like this Basel endgame. Don't think for a second that these rules don't have major implications.
그러니까 일단은 그냥 들어가면 돼요. 들어가고 나중에 결과를 나중에 봐야죠. 오늘은 하늘을 지옥 말고 하늘을 응원해야 될 것 같아요. 정신이 없어서 뉴스부터 보시죠. 오늘 중요한 뉴스가 뭐가 있는지 한번 알아보고 제대로 차트 볼 수 있을 것 같은데요. 지금은 좀 정신이 없습니다. And by the way, investment banking is still going to get done in the United States. It just won't be in a regulated entity like a bank. You just need to stare down the barrel of the camera and address the senator from Massachusetts directly. I think he is. Tom Show KBW is going to stick with us. Tom, it's good to see you. Time now for a look at some of the other stories making headlines this morning. Let's catch up with Ira Hackett. 오늘도 어떤 발표가 있는지 좀 알아볼 것 같아요. 말할 것 같아요.
Israel says 24 soldiers were killed on Monday after an attack on a tank and explosions at nearby buildings. This marks the worst single-day death toll since its war against Hamas began in October. Israeli forces are advancing deeper into the southern and central parts of Gaza while facing
slow quick. 아직 어려워요. 아직 slow 되는데 quick이 안 돼요. 어제 한번 해봤는데 쉽지 않아요.
The survey shows that the drop in appetites for business and consumer loans was smaller in the fourth quarter than in the previous 3 months of last year. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, a pivotal day in the Republican presidential race.
Republicans have lost the last 7 out of 8 popular votes for president. That is nothing to be proud of. We should want to win the majority of Americans. But the only way we're going to do that is if we elect a new generational conservative leader.
That's next on the program. This is Bloomberg.
I'm sure you received a lot of cases. Some questions just.
USDC is a digital dollar that works around the world with all the security of the dollar. So
오늘 뉴스 보니까 오늘도 시장이 분위기가 좀 괜찮은 것 같고 지금 니케이 105? 어제는 너무 많이 올라갔고 오늘은 좀 더 떨어지네. 근데 우리는 일단 나스닥이 제일 중요하겠죠? 오케이, 나스닥은 올라가고 있어요. 좋았어. 여기 뉴스 보니까 올라가고 있는데 차트 보니까 그리고 내 수익을 보니까 왠지 떨어지는 것 같은데 이게 도대체 무슨 상황일까요? 봐봐요. 지금 떨어지고 있잖아요. 거짓말장이고요. 너무 푸하게 들어왔네. 아니야 일단 보시죠. 막 들어왔는데 지금 바로 나가는 게 아닌 것 같고 비트코인 재물 확장 추진. 오늘도 비트코인이 난리가 났죠. 아직 판단하기엔 좀 이른 것 같고 좀 기다려보고 혹시 너무 많이 나가리 되면 그때 빼야겠죠? 지금은 그냥 맛보는 중?
We should want to win the majority of Americans. But the only way we're going to do that is if we elect a new generational conservative leader. I voted for Donald Trump twice. I was proud to serve America in his administration. But rightly or wrongly, chaos follows him. You know I'm right. Chaos follows him.
Chaos follows him. Here's the latest this morning. Nikki Haley making her final pitch to voters ahead of today's New Hampshire primary Republican field. Down to just 2 candidates and the former president holding a clear lead over the last remaining challenger.
제가 보니까 제가 유행어 생겼나 보다. 제가 이렇게 분석하면서 좀 라이브 하면서 내가 뭐 무슨 말을 하고 있는지 좀 약간 분석 겸 그냥 공부하기도 하고 이렇게 하는데 저 나가리라는 단어가 진짜 많이 써요. 와리가리, 나가리. 좀 입에 짝짝 붙어요. 그냥 이거 제 아이덴티티로 써야 될 것 같아요.
Even if Nikki Haley wins New Hampshire, we see no path to her becoming the nominee. Why is that?
You know, we're basically just looking ahead. Nevada and South Carolina, the former governor's home state, are going so hard for Trump that she doesn't have a path forward beyond this. What Republican voters have been telling pollsters all year long is that they want Trump. The way our might notice, nobody wants Diet Coke. They don't want all Coke alternative. They want the real thing. They can have the real thing if they just pull the lever for him, and that's what I expect they'll do. In New Hampshire, where he's polling up by
지금 좀 괜찮은 것 같은데? 쭉 올라가고 있어요. 어제 가격이 얼마였어? 17,500원 정도 되지 않았을까? 근데 이렇게 보니까 어제보다는 많이 떨어졌긴 했는데.
So if we have this rematch of Biden and Trump, where does it leave the independent voters, which many of them went for Biden last round? Do they still go for him this round?
That's the key question. That's the whole ballgame. 56% of those voters went for Biden.
일단 좀 기다려봐야 될 것 같고요.
For exactly those votes. It's about 28% of the population. Spread nationwide. It only matters in a handful of states. So we'll be watching those very carefully. It's the same ones that you would suspect: Wisconsin, Michigan, Nevada, Arizona.
근데 시간도 좀 애매한 시간이라서 발표 같은 거 별로 없고 뭐 없으니까 지금 그냥 이런 포지션을 유지하면 될 것 같아요.
Since you mentioned Biden in South Carolina, can we talk about Biden being missing today on the New Hampshire primary ballot? Is this potentially going to be an embarrassment for him?
I don't think so, and I mean no disrespect to New Hampshire, but they are not indicative of the state of national politics the way that they used to be. So just as dismissive as I am about a potential Haley, coming in 5-10 points shy instead of a 20-point blowout, I feel the same way about Biden. He's not on the ballot. I don't think there's any confusion about the state. He won by 8 points, if I'm not mistaken, in 2020. The Democratic Party is shifting gears into a more representative and diverse primary election, and this is the first year where they're doing that, so there's some anomaly here, but I don't think that it is an arbiter of things to come.
Henrietta, I can feel the exasperation in some of these notes when you get these sort of people saying, what are the possibilities of anyone else coming into the race? You say, the only way either Biden or Trump is not the nominee is if some sort of black swan event occurs before the convention and party leadership decides it is time or necessary to go in another direction.
뭐 지금 계속 올라가는 추세를 보여주고 있는데 이렇게 천천히 올라가고 있는데 순간순간 좀 변동성이 좀 많네요.
This is the core thing I can't wait for people to sort of migrate to. We have a $2.7 trillion tax bill that has to be written in 2025. The potential for minutia on the corporate tax side pertaining to tech and pharma companies, to international trade, international taxation, domestic cap gains and dividends taxes. Those are, the bread and butter of what I love to do. So I can't wait to get into that conversation. But to be really honest, the most striking part that investors are actually focused on at this point is the potential for a universal baseline tariff. For those of you who remember the 2016 efforts from Paul Ryan to impose a border adjustment tax, it's time to dust off those old books. The universal baseline tariff is what investors get most keyed into, and they do not take Trump lightly when he says he would impose a 10% tariff on all imports. It is the primary revenue raiser in his tax plan, and as I mentioned at the outset, you must have a tax bill in 2025. All of the individual tax rates expire. Both Biden
그쵸. 저 사실 그런 마찬가지 생각이라서 계속 그 포지션을 유지하고 있어요. 저 지금 이 포지션을 좀 약간 여기서만 버티면 쭉 올라갈 것 같아서 그러니까 지금 그 희망을 잃지 않고 계속 가야 되고 물론 조금 위험할 수도 있으니까 이렇게 보일 수 있는데 이럴 때는 안 보는 게 나아요. 제가 오늘따라 인기가 되게 많아요. 정신이 없거든요. 다른 일도 할 게 좀 많아서 타이밍을 놓칠까봐 지금 너무 조마조마해요. 형이 요신 누님, 계속 누님 같은데 누님. 주한 씨한테 누님은 아닌 것 같고, 네, 제 힘을 받아주세요. 좀 불안한데? 아이고. 설마 이대로 떨어지는 거 아니죠? 저는 좀 피부 관리 너무 잘해가지고 아마 누님일 수도 있어요. 조심하세요.
He tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things we have this great connection about the love for baseball, and the reason why Warren and I got to know each other is he insured my contract 252, and I reached out to him and I said, "Well, now that we're business partners, maybe I thought I would have a I'll be there. I want to play out. And that led a series of back
Yeah, you are seeing a bit of a repricing
pricing in Fed funds futures, where you can see about a 40% chance priced in of a March rate cut. But does it really matter if it's March or if it's June? If it's March or May or June? I mean, honestly, at a certain point, I've been reading all of these notes where it doesn't ultimately matter if they start cutting rates and if they're doing so at a time where there's otherwise strong growth. So that, I think, is the bigger question right now.
The Thomas show of KBW alongside us, sort of nodding as Bremo talks.
Direction. That is the key. I think it's unanimous that everyone believes that the next move by the Fed is a cut, which means people can start planning for it. Because the relentless increase in inflation is so low, now we get something
And the cuts are good for the banks now.
They are. Until it decreases the competition.
봅시다.
Isn't that a big change from what we used to talk about?
Yes, banks are typically asset sensitive. Things that do better when rates rise, but banks don't do well.
좀 나쁘지 않은 듯? 그쵸. 오늘 좀 그냥 그 매수 포지션을 유지하면서 쭉 기다리는 게 괜찮을 수도? 물론 제 느낌상 이거 다 제 느낌상이긴 하지만 오늘은 좀 올라올 것 같아요.
Potentially going to finish very shortly. I'm astonished by how much money was just spent in New Hampshire alone, more than $75 million. It has 873,000 registered voters. That's a ton of money in a tiny state. Nikki Haley has spent a lot of money and time there, and it looks like the former president is going to win it.
I wish that you could just go to one of these small states, they just mail a check. I mean, at a certain point, isn't it wouldn't that be more effective than trying to advertise in all of these ways when so many people have already made up their minds? Just saying, not that I live in one.
You want to make it easier?
Well, I'm just saying, I don't know, I feel like these are such
You want to make it more transparent.
Exactly, it's such a sort of small referendums, and it basically is becoming clear. We know what the outcome is going to be. When can we move on to policy?
뭐 잘못하면 뭐 어때요? 선보이느라도 잘못해야죠. 크게 잘못하고 저 앞으로 해외선물 안 할 거야 이런 생각을 가지면 되잖아요. 왜냐면 사실 그 해외선물 그만큼 중독이 너무 크기 때문에 좀 많이 위험할 수도 있어요. 매일보다는 그냥 과하게 하면 진짜 큰일 날 수도 있어요.
Decisions get made by the president's team.
Big 12 months ahead. I want to turn to this story. The US and UK launching more attacks on Yemen's Houthi rebels in the latest efforts to stop the group targeting ships in the Red Sea. It's the 8th round of Allied attacks since January 12. The ongoing tension causing a spike in shipping costs. AMH China to Europe rates up almost 400% over the past 3 months.
That's right, you're going to see ships continue to avoid the Red Sea, continue to avoid the Gulf of Aden until they actually have this under control. What we continuously see from this administration is they want to degrade Houthis' capabilities, but at the same time make sure there's no civilian casualties. What did Biden say himself this weekend? Is it going to stop the Houthis? No. Potentially gives them a little bit less ammunition based on where they are and some of the ammunition.
Let's talk about the economic fallout of everyone's shipping rates. How close are we to seeing goods inflation start to pick up again?
I've gotten so much pushback over the past couple of days, I've got to be honest. People saying, you're basically overplaying this. It's not going to cause massive inflation. You're not already seeing it. It's only going to be a European problem, which is the reason why the U.S. isn't necessarily going to come out with more sort of protracted efforts to stop this. I don't know. I'm curious, and I keep pushing back and saying I think it could be an issue. I've heard the opposite, where an analyst said to me, it is affecting someone's bottom line at this exact moment. Maybe we're not seeing it as big as, say, when all the ports had those huge, pile-ups, but at this point, it is hitting someone's bottom line. The amount of money and fuel now
not just the Suez Canal, but Panama as well at the same time.
I would just say, if you were to think our macro risks in general, high or low, they're high. And so you can just add this to one for another reason. I think it just leads to a little bit of caution amongst the business community and investors.
Some of the stories for you. Citi cutting its bonuses and its investment banking division by as much as 20%, according to a report by Financial News. It's the latest move in a major organisational overhaul plan, with 20,000 jobs set to be eliminated over the medium term. Bonus season on Wall Street. How good or bad is it?
Look, typically Wall Street is a pay-for-performance business, and investment banking, I know no one's crying for investment bankers, but it's essentially been in a recession for the last year. So compensation typically follows revenue. So on a percentage change basis, it shouldn't be surprising. One of the things I read in one of the stories, though, is that a lot of the producers will get paid more than management. I would actually applaud them for that. That's actually, I think, a good step if that's happening.
I just wonder who the performers are. Are they in the tech wing, or are they on the trading floor, or on the banking floor? I mean, at a certain point, where is the outperformance going to come from as we see kind of banks shifting their models in a significant way?
Well, what I will tell you is that there's tremendous pent-up demand for investment banking services. All this time that there have been no IPOs and mergers have been slow, there's a lot of pent-up demand. And also, 5 or 6 years ago, we started the boom of private equity. There are a tremendous number of companies in private equity portfolios that are seasoning that need to be dealt with. There is, and my experience, I've been on Wall Street for 38 years. My experience is when it turns, it's not just a little bit. It usually turns a lot. And so once the markets open, you'll start to see a lot more activity. And I think Citi is probably like a lot of other firms, which is that you have to think, is what we're seeing now the new normal? I personally don't believe so. I think we will see, when we get stability and orderliness, like we've talked about
밖에
before,
날씨가
there's a lot
너무
of business
미친 것
to be done.
같아요.
And I think a lot of price
내가
levels will
방금
reset, which will allow
선물
things like mergers and IPOs to happen.
건드렸는데
You're constructive about the end of this
손이
year. I will just say this about Citi. Getting paid in
얼어버렸어요.
Citi stock has been like getting a bonus cut every year for a
여기저기 다
long time.
핫백을 붙이고 있는데
Except for
아,
right after
진짜
2008 and 2009.
날씨가
It's actually a
너무
really good
미친
thing.
것
Briefly, for a hot
같아요.
second. But you're right. So it raises this question:
다들
how do you then
여러분
even the playing field to
감기
attract talent in another
조심해야죠.
way?
And one
그쵸,
thing I will
아시죠?
say is, we talked earlier
건강이
about how big seems in
최고예요.
times of crisis to be a safer place to put your money. Big hasn't necessarily been the best investment, or they're not necessarily the highest performing companies. So like there are great small banks, and there are banks that are really big that have challenges. So so size isn't a determinant of success. It might be a determinant of depositor confidence, but not of success.
That was the story last year, that's for sure. Let's turn to earnings from United Airlines. The shares flying higher the pre-market after the company reported better than estimated results. The company also posting a strong profit outlook for the year, despite uncertainty remaining over the status of its Boeing MAX 9 jets. Brooke Sutherland of Bloomberg Opinion joins us now for more. Brooke, how are they getting this done with so many planes still on the ground?
I mean, I think their forecast for the first quarter is not great. I mean, that is a seasonally weak period for airlines, and it's been one that's particularly difficult for them to navigate in this post-pandemic period where you do not have that business traveler coming back in the way that they have historically. So they're looking for sort of a sharp turnaround in the second part
좋아요,
of the
좋아요.
year.
오,
And I think a
계속
lot of
올라가고
that
있어요.
is
좋았어,
international travel and the sort of
좋았어.
continued
아, 기분이
trend of
좋았어.
travelers
아,
gravitating towards more premium
신나,
options.
너무
The
좋았어.
legacy carriers like United have really benefited in this market, whereas the low-cost carriers have struggled.
If they cannot
오케이,
get
오케이,
their
오케이.
MAX 9
쭉쭉
jets back
올라가자.
online, if they can't
오늘
remedy some of
하늘로
these issues that they complained about, or Scott
갑시다.
Kirby reportedly has, does that materially affect their outlook? Does that really hit their stock yet again, given that they had such uncertainty baked into their forecast?
I think you're going to see higher maintenance expenses. I mean, that's the knock-on effect for some of these airlines. Delta, when it reported earnings earlier this month, was talking about $350 million of extra maintenance expenses this year, just relative to last year, which was by no means cheap as far as aircraft maintenance. And it's not just the MAX 9. Remember, you also have RTX, which is doing a very costly recall
얼마나
of
좋아.
its GTF jet engine that powers the Airbus A320 jets. So you're talking about significant chunks of the aviation fleet potentially being grounded over the course of 2024. What that means for the airlines is that they have to keep flying older planes for longer, or they have to use bigger airplanes for markets that don't necessarily need that many seats. That all has a cost to it.
Just on a related point, GE came out and it disappointed right ahead of their big break off, and you're seeing GE shares tank. What's going on in the industrial complex in the U.S., or is that just too broad of a question? Is this really a Boeing problem? Is this a GE problem? Is there something that's hampering these companies so that they can't get it done?
I think with GE, so this stock has really taken off like a rocket ship ahead of its breakup. I think people are excited about the possibility of having a simplified GE at long last. This is also a company that under Larry Culp has had a tendency to be very conservative with its guidance. And so I think we need a little bit more details there, but I don't know if that's necessarily sort of a macro impact. On the other hand, you did have 3M out this morning calling for flat to up 2% organic growth.
좋아요 하려고 했는데 지금
Something that's really going to get
벌어지네.
investors excited, particularly coming off of a 2023 that was very weak for short cycle industrial companies like 3M, those companies that have sort of the quicker turnaround times. They've really been struggling with this period of inventory destocking that we've seen. You had manufacturers build up a huge amount of inventory during the supply chain disruptions, and now they're working that down, and you're seeing orders start to slow. And we really haven't seen kind of the boom to the bottom line from any of these phenomenons that we keep talking about, whether it's reshoring, electrification, automation. It's just not necessarily showing up in a major way just yet in bottom line. So analysts are optimistic that might happen in the second half of 2024, but we'll see if we end up getting that.
Brooke, just want to finish where we started, which is on Boeing and United. On Boeing specifically, how do you expect this to end? From the people you speak to, what's the base case right now?
I think you have to look at management, and I think you have to wonder how much longer you can keep the current management in place, just given the series of crises that Boeing has dealt with, big and small. Of course, you know, from the grounding of the MAX to then just having sort of quality control issues come up before this latest one involving the door plugs. There was improperly drilled fastener holes. There was incorrectly installed rear fittings on the MAX. And I think you have to wonder if maybe it's time for a deeper rooted cultural change. We were talking about GE. That is a company that has really gone top to bottom and sort of reworking the way that that business is run. And I think you need a similar change at Boeing, and that might have to come from somebody with more outside perspective.
Hey, Brooke, thank you. Brooke Sutherland there of Bloomberg Opinion. Bramo, the second time that's come up with Brooke, the cultural issues inside the company.
I mean, you can't avoid it right now because it's been a series of things, right? In 2019, there was this issue, and now it's just one hit after another. I mean, it's just the fact that they have to examine these plugs in different models. The fact that we saw a burning plane flying over Miami. This isn't helping
It's kind
the
of shocking,
reputation.
right?
Yeah, it is. I mean, this is not what you want to see.
Do you think there's a risk here? Perception, not reality, but perception, that the regulator starts to be perceived as being a soft touch on a company like Boeing because it's a national champion?
There is that issue. There's also an issue of, you know, who are they getting to inspect some of these and what kind of turnover are they seeing, especially post-pandemic. We hear this again and again, staffing issues post-COVID that have become really problematic and have created some liabilities in a number of industrial companies. So at what point will that really kind of shake out and normalize?
Huge, huge issue. Time now for some stories elsewhere making headlines this morning. Let's get you an update with Yahara Hackers from Bloomberg Brief. Hey, Yahara.
Beijing is considering a stock rescue package to stabilize its slumping market. Bloomberg learning that authorities are seeking to mobilize about $278 billion from offshore accounts of Chinese state-owned enterprises. That would be used to buy shares onshore
봐도 안 봐도 지금 계속 그 포지션을 유지하려고 하는데 그냥 계속 보다가 불안하다 이렇게 할 필요 없는 것 같아요. 그냥 안 보는 게 나아요. 제가 이 전략을 참 좋아요.
Raw will air on Netflix beginning in January 2025. Harvard University is beefing up its legal team for 2 probes brought by the House Education and the Workforce Committee, according to people familiar with the matter. The investigations focus on anti-Semitism on campus, as well as Harvard's handling of plagiarism allegations against former President Claudine Gay. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, the credit market gets the boost.
These are, banks that wouldn't have been able to issue last spring, and you wouldn't have been able to sell the paper even if you tried. And now they're issuing with a little concession.
That's next. You're watching Bloomberg Surveillance.
조원 씨 이런 얘기 하면 어떡해요? 저도 불안하게 만들지 마세요. 전 지금 계속 멘탈 놓고 있거든요.
That are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this billion euro we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now.
잠깐만요. 어디 가는 거야? 어디 떨어지는 거야?
In a multi-trillion dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking
We'll show you what's happening
뭐지?
like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Stocks on the S&P 500 look like this, totally unchanged after closing yesterday at another all-time high. Under surveillance this morning, a strong start to the year for the credit market.
We've had a tremendous few weeks in investment-grade credit. For example, I think just to speak to the amount of the way that sentiment has shifted over the last 12 months, you think about the regional banks and the issuance that they've done over the past week. These are, banks that wouldn't have been able to issue last spring, and you wouldn't have been able to sell the paper even if you tried. And now they're issuing with little concession and, multiple times oversubscribed on the books. So it's been a really large sentiment shift, and I don't expect that to change anytime soon.
Elisa, what a start to the year for credit.
And if you hear the pile on, it's coming from every corner
오늘은
of Wall Street.
하면
Not
안
only the
되는데?
issuers seeing a good time to
오늘은
issue the
아니잖아.
fastest pace of issuance in, I think, decades, but the buyers as well. Andrew Sheets, global head of corporate credit research over at Morgan Stanley, writing in a note, quote, "We don't see credit as sensitive to whether the Fed starts easing in March or June if the longer-term path is clear." In other words, rate cuts. Overall balance sheet health looks solid with plenty of dispersion. So here's the question, John. Is there anything that could crack that solidness in a soft landing situation, even if the Fed doesn't cut as much as people expect? Credit, a lot of people see as potentially outperforming.
Let's ask Megan Robson, the head of US credit strategy over at BNP Paribas. Morning, Megan.
Good morning.
What a start to the year, January. Can we just start with the supply? What's the demand been like?
Incredible demand for the issuance we've seen. So, as you said, high-grade issuance, one of the top levels we've seen on record. And it's amazing to see IG spreads have actually tightened as we've seen all of that issuance. So we think some of it is corporates pulling forward issuance from later this year to now, given the strong demand. In the case of financials, we've also seen regionals take advantage of this environment, diversifying away from kind of their deposit base and locking in some long-term funding.
That's what I wanted to get to. Are they pulling forward this year's supply, or are they catching up with last year because they couldn't issue?
It's a great question. So if you look at long-term debt growth for investment grade, it's still very muted. We're still at 1% growth. So this isn't a huge boost in issuance overall in terms of the long-term trend. So I think there are some issuers that are catching up, but there's also high-grade issuers that we've talked to that we're contemplating issuing in third or fourth quarter and are just taking advantage of this demand. Investors are thinking this could be the last time they have this opportunity to lock in yields in investments at these levels, and so that's why we've seen so many deals oversubscribed.
Some people, some skeptical people could say, if they're issuing now to get ahead of something that is less favorable, that means that yields are going to rise or that spreads are going to rise. And yet nobody seems to be calling for that, certainly not on the investment side. So can you kind of bridge that gap?
Well, I think we're pricing in this high for shorter environment, as you said, which should benefit the refinancing risk, I think. But the open question, which is still very debatable, is if these lower quality issuers are going to be able to refinance later this year. So we've seen a lot of high grade issuance, higher quality issuers refinance, but for triple Cs, you still have 25, 30 issuers that need to refi this year. For them, the refinancing penalty is still 400, 500 basis points. So that is a major risk for the credit market still.
We have Thomas Schode here, the head of KBW, nodding vigorously to what you're saying. What could go wrong? I mean, basically, given that everyone seems to be seeing this sweet spot in credit.
Well, it's interesting because right now the consensus is pretty strong, so you have a lot of believers in the soft landing. The risks that we identify is around credit quality. We are forecasting a 25% increase in credit costs for the banking industry for this year, but that is still below what's normal. So you could argue that the banks are still over-earning on credit. When credit costs go up, it shouldn't be a surprise. The surprise is for how long it's been so low.
여기쯤 너무 기분이 좋았거든요.
And when we look at the recent quarter earnings,
지금
non-performers are up a little bit.
도대체 무슨 상황일까?
Credit quality is still excellent, I would say, in the banking industry. And there's nothing on the horizon that's making us nervous about it. But you've got some big issues. Now, commercial real estate is a big issue, but we think it's primarily specific to the big cities and the big properties. And we also believe that non-banks have at least half of that exposure. It's not all banks that have that exposure.
Megan, would you agree with that?
So I think we were surprised in the financials earnings to see how positive the credit picture was for financials. So CRE losses increased a bit, but overall very muted. And so I think CRE remains an overhang, but very slow-moving train.
저 인정 되게 쿨하게 되게 빨리 하는 스타일이에요. 오늘도 나가리 됐어.
And I would say from a bigger picture, pardon me, is it just means the worst case scenario is further off the table. And it makes people feel more comfortable that we're in a more orderly, typical market. Because we're seeing no directional changes.
나가리 진짜
Some of those risks everybody was worried about last year are happening. We're actually getting further from that.
같아요. 나가리.
Megan, if people had said
나가리 됐어.
5 years ago, 6 years ago, that rates would be at this level.
찾아봐야겠다. 아마 진짜 이런 단어가 있지 않을까요?
We're going to come and have to survive. People would have said this is going to be Armageddon. You'd have incredible mass defaults. Does it ever surprise you that we're here and people are talking about this sanguine environment where everything's going to be fine and companies are going to be able to survive at these levels?
I think it's very surprising to us. It has been. I think the liquidity backdrop has been very, very supportive. That's one factor. And then I think look at the data. It continues to surprise to the upside. Consumer sentiment, retail sales last week. I think if we start to see earnings growth and EBITDA start to really be more challenged this year, then I think that could really bring that risk back into the discussion.
And what I would say is I think that the forward market's going to favor companies with earnings, and you saw it in the stock market, and you're going to see it, I think, in the credit market would be my perspective and our perspective. And also, as we get orderly, those companies that might have that trouble that you were alluding to, if we get an M&A market, they'll sell before they'll have to refi their debt. Now, when there's a crisis, you can't even do that. But if we get stability, they will take actions to correct before they have to go to market with a tough deal.
Megan, just final question. Favorite trade for 2024? What is it now?
Favorite trade. So we like decompression still, outperformance of investment grade.
힘내야 되는데.
Megan Robson,
힘이 없어요.
constructive on credit. It's amazing to see how busy things have been to start 2024.
힘이
Tons of supply,
없어요.
tons of demand, straight out the gate.
무슨
And at a time
말인가
when rates haven't gone down
모르겠어요.
that much and they could potentially stay here for quite a while. At a certain point, if the economy does well, people are happy. Although it's so funny, it tells you where we've been. That we heard Tom say, as long as they have earnings. The fact that we had companies with no earnings that borrowed for as long as they did tells you something.
Some things are getting better.
Well, I got to tell you what you just said. Say, gee whiz, I'm glad we're positive on the
혹시
investment banking
음악이
stocks.
괜찮으세요?
Which is what
너무
yes, we think
크게
You are
들리지는
super constructive, I would say, looking
아니시죠?
for that re-acceleration year-end with the one thing that could
저한테만
disrupt it.
너무 크게
credit
들리는
issues.
건가?
Correct. And we were just talking about it. And those are things like commercial real estate and also consumer credit. 3.7% unemployment rate is probably better than we would have expected. We are seeing stress starting to come into the consumer, but it's still the companies that are major consumer lenders talk about it as we're normalizing. There isn't a sense that we're breaking out to another level, but that's something that to watch.
Hey Tom, I've loved this. It's great to see you.
Good
Thomas
to
Show
see
there,
you as well.
KBW, Megan Robson as well from BNP Paribas.
그게 안 들려? 오케이, 딱 좋아요.
Commercial real
왜냐면
estate.
뉴스도 들어봐야 되니까.
Through the economy and waiting.
It's been 3 years. Remember when the
방해가
pandemic hit,
될까
lockdown,
봐.
Armageddon, and I've been saying that word a lot today. I apologize. I'm going to move back. There was a real question around the survival of office space just in general, and now you have a reset. In certain pockets, still distressed, but it's been basically, people think, maybe priced in.
If you missed the coverage of Bramo in Davos, Switzerland at the World Economic Forum, constructive.
Okay,
I would say
hold
on the edge of hopeful.
No, responding
She was
to
optimistic.
A couple of days back in New York City and it's Armageddon on repeat. In the next hour, we'll head to New Hampshire for the latest, plus Priya Misra of JP Morgan Investment Management. Michael.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Naftali Holt showed me around the Celebrity Beyond, Royal Caribbean's newest ship, rolling out not the red carpet, instead the magic carpet. An example of investment that's yielding returns in several different ways.
음악팀이 조금 죽어 있는 것 같긴 하는데 뭐 재밌는 거 다른 거 좀 알아볼까요?
Why don't we just make it a really cool feature spot where people can enjoy it beyond the functional space? And we created this bar. It went up and down.
Now, what does it take to
How about the Instagram? Can you about that?
I can imagine.
Instagram moment with the sunset, you're having a drink with your friends or family. I mean, that's amazing.
So what does it take to do something like this? And I'm thinking cost, engineering, time.
Yeah, a lot of effort from a lot of people. So it starts from just the
그러니까
design,
다행히
the
수익을
conceptual
보는
aspect
줄.
of it. Then we need to figure out a lot of technical factors, the weight, the wind, and so lots and lots of hours of really hard work. And every time we up the game, we see that customer willing to spend more.
힘내라, 힘내라.
San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
한계약도? 오, 괜찮았나? 한번 해볼까? 근데 혹시 잘못될까봐. 한번 해볼까?
And so the U.S. has been explored more than any other place in the world, I think.
지금 몇 시야? 10시야? 10시면 30분 버텨야 되는 건데
We'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries. Later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old, you're running USAID. How many employees does it have?
We
made 11,000.
Did you feel qualified to run something like this?
I did until, you know, the work started.
뭐 물론 지금 타이밍이 좀 괜찮은 것 같기도 한데 유혹하지 마세요. 네, 제가 뭐 잘못하면 제가 감당해야 되잖아요.
Like next, and they're pricing probabilistic outcome into this.
I actually don't see a huge gap between the market and what the Fed ultimately wants to do.
They're going to be taking a read on that macro outlook to figure out when to cut rates. The market's sort of, in my view, a little bit over its skis.
Every now and then, things get ahead of themselves, and to us, this is one of these times.
This is Bloomberg
지금 너무 좋은데? 너무 올라가고 있는데? 갑자기 왜 이래? 어디까지 올라가? 아이고 무서워라. 아이고 불안하게.
Netflix, the first of the bunch, kicking off things. We're going to be hearing also from Tesla later in the week, as well as Intel. Here's a key question. How high is the bar? We were hearing yesterday, maybe it's not that high for the tech names, but we've seen disappointments and they've been punished even this morning. So at what point do we get that blowback to this soft landing nirvana versus the opposite, which seems to be pylon this morning?
The United States wins, right? The US wins. Let's just focus on tech numbers for now. This is where these big tech firms are. Europe is where they're not. China at the moment is really struggling. The difference between the United States and China this morning, I think we sit on that for a little bit longer. We've got the US at all-time highs and China trying to come up with a new plunge protection team to stimulate demand in its equity market. That is night and day in global equities.
Two questions or 2 points. This is sort of a China-specific question and how much the U.S. and Chinese markets have diverged, and economies for that part, given what we've seen. And then you can ask this question about how much the U.S. is alone more broadly. Right? We've seen this with Europe. We've seen this with other countries and other regions. The U.S. has continued to shine, and it has been with big tech names, even at the expense sometimes of everything else.
The market's good. The politics is a little bit messy.
떨어지고
We're talking about
있는데.
New Hampshire. We're down to 2. We're speaking Haley versus Donald Trump. AMH, we're told repeatedly by many people on this program already in the last 24 hours, this race could be over by tomorrow morning.
It does feel like a make or break moment for Nikki Haley. We saw the way Trump swept through Iowa. There's
재미없게 왜
potential for
이래?
Nikki Haley to break through in New Hampshire. It is a place that she spent a ton of time. It's feudal ground for her. But the problem is, the polls show former president's winning. And then what's her path after that when she's already down her polls in her home state?
I feel like a lot of the reports and a lot of the analytics right now has moved beyond Nikki Haley. And for better or for worse, a lot of people are just saying, when will she drop out? Not what is her path to be the candidate. So here is the question. When do people start moving to the policies we've been talking about this morning, the potential for some sort of blanket 10% tariff, which Donald Trump has talked about? Do we start talking about that? When do we start talking about what the U.S. looks like under whoever could win this
I think right now, Bramo, I think the problem that I have and the worry that others share is that we have a foreign policy vacuum at the moment. We've got the United States and the UK struggling to restore order in the Red Sea. And do you know what the perception of things right now is of America? That there is weakness, and it could well be replaced by strength in the next 12 months. Just how vulnerable are things on the international scene at the moment?
Well, I think it says a lot, the fact that you said it's only the U.S. and United Kingdom that are there in the Red Sea striking back at the Houthis. No other countries are joining the United States.
오늘 30분 말고 오늘 10시 50분에 점진적이고 소매 지수가 있네요. 그럼 그때까지는 좀 버텨야 될 것 같은데 12시에 1월 치먼데 연은 제조 지수 날개가 나왔네. 3시 미국 국채 2년 물발 발행 금리 3시까지 있을 수 있는지 잘 모르겠는데 그때 원래 꿀잠 자고 있거든요. 저 오늘따라 좀 뭐가 많네. 혹시 오늘도 설악산 구경을 할 수 있는지는 모르겠지만 아마 그렇지 않을까 싶어요.
Still, even though the data has been better than expected, it hasn't really spoken to this reinflationary kind of vibe because you still see inflation expectations coming down. That said, at a certain point, higher yields are going to be a problem for risk assets.
Let's get to the top story this morning. Markets at all-time highs as tech earnings begin. Investors looking ahead to results and placing their bets on rate cuts. Katie Kaminsky of Alpha Simplex writing this. Fixed income cut optimism is fading and yields crept back up recently. The general view is that inflation could be stickier than hoped and it will take more time to get to rate cuts. Katie Kaminsky joins us now for more. Katie, let's talk about that spread and welcome to the programme. The difference between the perceived view of the Federal Reserve and what the market is priced for right now. How do you expect that
넷플릭스 얘기가
spread to
나오는
reconcile?
그렇지 않을까? 제가 원래 넷플릭스 옛날에 엄청 많이 봤는데 최근에 시간이 별로 없었는데 근데 갑자기 넷플릭스 얘기가 나와가지고 뭐 좀 볼까? 요즘 재밌는 거 뭐가 있는지 좀 봐야겠다.
That doesn't mean we're not in the right path. It just means that this disinflation hope is not really sort of going to happen.
근데 요즘은 넷플릭스 회사처럼 난리도 났고 주식도 너무 대단한 것 같아요.
Well, long's the new short because we finally saw a pivot in the fixed income market after 9 quarters. We were looking for that rates, we were looking for the end of the rate hiking cycle. And when you think about it, I mean, bonds still look good. They still have positive carry. And what we're trying to find now from a technical perspective is a steepener. And I think that's probably what is the shape of the yield curve is really the question for us right now this year. But it doesn't mean that bonds don't look somewhat attractive.
When you say bonds, is there a particular tenor that makes sense to you, especially as we embark with the 2-year auction today on $162 billion of Treasury auctions this week alone?
Well, let's just say that short-term fixed income is still a really nice return. And then when you look across the yield curve, I'm a little more reticent about long-term bonds because we don't know yet how things are going to play out. I know credit could be an issue. We could see a resurgence in inflation. So my general view is to be a little bit cautionary when you only have a very small premium for long-duration bonds. So a steepener is probably the best position for that. So long the short end, short the long end.
Okay, Katie, when we pick up on that final point, the prospects of inflation re-accelerating, Michael Kalanovic of JP Morgan saying, we believe the disinflation process is likely to slow
제대로 들어가는 거 맞아요? 아직은 너무 확실하지 않은 것 같아서.
and upside risk for energy prices. Do you share that concern?
Yes, I do. And the reason for this is if you look at the signals recently in the commodity markets, we have been watching for a little bit of an uptick in energy prices, and you've seen that this month. It's just showing us that there are still some large risks that could easily cause some vulnerabilities in those sectors, which may lead to potential pass-through effects to companies. So it's just going to take time to get inflation down to what we're used to if we continue to have some issues.
Katie, can you just build on that a little bit more? How much time would it take for those pressures to start showing up? Would you expect that in the next few weeks, the next few months? Where on the calendar would you expect the tension of the last few months to land going forward?
Well, the thing that's challenging with this is we have to see commodities actually move pretty quickly. I'll just be honest with you. So that's why we're watching them. If you look at what happened during the Ukraine crisis, commodities moved first. So I would expect if we actually have problems, we will see that in the short run rather than the long run. So that would be sort of a catalyst to a longer term move that could potentially affect inflation.
Katie, last year you came out and you had some conviction into short bonds, which was counterintuitive, and for the bulk of the year actually did really well. What's your highest conviction now, heading into a 2024 that
months. It's surprising that that continues to be a very interesting differentiator across the board.
Hey Katie, appreciate the update. Thanks for being with us. Kelly Kaminsky there of Alpha Simplex. You'd expect it to show up in energy markets first. Check out crude. AMH still in the 70s, even with what we've been talking about now for months. It's early October.
It's also important that we're waking up to another night of airstrikes in the Red Sea, and energy prices are down this morning in the red. Look at WTI strength. This is how much this is just U.S. policy, right? It's basically how much we're pumping. At the same time, you do wonder where the margin of increased production comes from. Should there be a more material disruption? Because this is all just a slow grind, not necessarily some sort of massive, obvious disruption. Also, Libya oil came back on. People are pointing to that too.
79.32. Brent crude.
그러네요. 딱 4만 원만 들어가면 되게 예쁜 숫자를 볼 수 있을 것 같아요. 400만 원. 얼마나 좋을까? 400만 원을 만들고 얼른 좋은 제품 같은 거 살까 아니면 그냥 여행이라도 좀 가볼까? 왜냐면 사실 400만 원이면 어디 2주 어디 가면 되게 충분할 것 같은데요. 물론 완전 락셔리 호텔만 아니면 되고 아니 사실은 400만 원만 있어도 어디 한 달 정도 충분히 좀 평화롭게 살 수 있을 것 같아요. 500만 원 만들면 좋죠. 저게 좋죠. 근데 보시다시피 그렇지 쉬운 일이 아니고 저는 완전 초보자고 저한테는 겁이 많은 사람이라서 아직은 좀 어려워요.
Exactly, because you basically get the money from that, you drum up support.
승부를 봐야 되는데 아니요, 볼 거예요. 저도 그렇고 주원 씨도 할 수 있을 거예요. 저 믿어요.
That contract that's dependent on advertising revenues.
Bob Michael of JP Morgan Asset Management keen to see that Liverpool documentary. Up next on this program, Hayley's last-ditch effort to
원래
take down
약간 초보 운이 있잖아요. 초보자들의 운? 뭐 이런 거 있잖아요. 근데 나중에 좀 능숙해지면 그때 진짜 위험할 수도 있어요. 그럴 때는 제일 긴장 빡짝 해야 되고 절대 여유롭게 가면 안 돼요. 그쵸? 약간 긴장 좀 풀면 바로 긴장 풀지 마라고 하고 그냥 내가 진짜 쭉 계속 가야 돼. 트럼프가 이 쇼를 그만했으면 좋겠어요, 진짜. 이 사람 때문에 진짜 주식 시장이 지금 왔다 갔다 하고 있잖아, 진짜.
1 hour and 15 minutes away from the opening bell. Equity futures on the S&P 500 just about unchanged, a positive by almost 0.1%. The yields bleeding a little bit higher by 2 basis points. Your 10-year 4.12.62. Under surveillance this morning, Haley's last-ditch effort to take down Trump.
What have we seen for the past 6 months? Head-to-head polling that shows Donald Trump potentially beating Joe Biden in many of the swing states. That has been a psychological factor that has been truly underreported, and now there's a feeling of inevitability. You've seen the race, we've seen the Republican Party coalesce around Donald Trump, and possibly even there's bigger plots around who could be his vice presidential pick rather than technically beat him here in New Hampshire. Donald Trump and Nikki Haley
제발 2만원도. 오늘 역사적인 날이네요. 제발 올라가자. 5,000원. 5,000원만 더. 제발. 이거 진짜 캡처 해놔야겠다. 400만원 넘으면 나 캡처 해놔야겠다. 가자, 올라가자. 제발 좀. 목말라. 아니야. 떨어지면 안 돼. 분위기 좋았잖아. 이거 참나.
Let's head to New Hampshire and catch up with Bloomberg's Katie Lyons. Katie, can Nikki Haley get it done?
It's been described to me as an uphill climb today, John. That frankly is what we're hearing from almost everyone, that this is going to be very hard for her to pull off. Anne-Marie is absolutely right that this is going to be primarily about turnout today. The Secretary of State, David Scanlon, actually joined Bloomberg yesterday, predicting more than 320,000 voters could turn out to vote in the Republican primary. Americans for Prosperity Action, the super PAC that is supporting Haley, has said something closer to 340,000, but it's going to have to be a number like that, a real turnout, a show of these independent and undeclared voters that could break for Haley, that would actually help her potentially cross the finish line. But polls suggest that this is going to be incredibly difficult to pull off. Suffolk University and Boston Globe have a tracking poll. The latest poll this morning on the day of the primary shows Trump at 60%, 22 points ahead of Haley. That is the widest spread we have seen this week. And typically, yes, New Hampshire is able to deliver upsets. It's happened historically in the past, but you see candidates who ultimately end up upsetting, gaining in the polls leading up to the day of the vote, and that is not what is happening for Nikki Haley in 2024.
Can we talk about the name that's not on the ballot, Kaylee? President Biden is not on the Democratic ballot today, and you caught up with Representative Phillips, who says if he doesn't get a very large showing, if people write in his name, then he's perceived as weak.
올라갈 수 있어.
Well, it was really interesting to hear from Congressman Phillips, who of course is competing for the Democratic nomination and has been campaigning here in New Hampshire, while President Biden is not, because President Biden has, with the DNC, together decided that South Carolina should be the first primary because of its more diverse base of voters. So that's why there is just a write-in campaign that the president and his campaign can't directly support.
올라갈 거예요, 지하로. 무슨 말이야? 주한 씨 한국 사람 맞아요? 뭔 말이야?
have secured 80% plus of the vote. And that is really the marker that Dean Phillips laid in the sand for us when he joined us here at Bloomberg yesterday. He thinks Biden should be putting up something 80% plus. If he doesn't, then that's a question of whether or not he is a candidate.
예. 좋아. 오. 400만 원 넘었어요. 쪼까. 아이고 잘했어. 아. 좋아요. 그대로 갔으면 좋겠어요. 올라가자. 역사적인 날이네요.
It really is going to come down to how close this race is. The issue in Iowa was that Trump was leading by such an overwhelming margin that it was very clear very early on that neither Nikki Haley or Ron DeSantis or Vivek Ramaswamy, two individuals who of course were still in the race at that point, were going to be able to catch him. If it is a tighter race than the polls suggest this evening, then it may be more difficult to call as early as we saw in the first nomination caucus.
Kaylee, let's talk about weather.
그래도 한 번 넘었으니까 기분이 좋아요.
I'm looking at the weather in New Hampshire. Today it's going to be a high of 38 degrees and a low of 28 degrees Fahrenheit. It seems just fine for New Hampshire. Is that really going to determine turnout? Are you expecting to see some sort of turnout that is much bigger than Iowa?
Well, Lisa, I have to say, it feels like the Bahamas here after Iowa last week. This is more than 45 degrees warmer than it was in Iowa. So yes, weather could play a big factor in driving people out, which may be contributing to some of the high numbers we are seeing from the likes of the Secretary of State north of 300,000. But really, turnout is driven by enthusiasm in large part, right? And that is another thing we have to consider when we're looking at the polls between Nikki Haley and Donald Trump, is that Trump voters are just much more enthusiastic about his candidacy. They are far more likely to say their vote is for him rather than against Haley. With Nikki Haley, a large chunk of her voters are voting against Trump, not necessarily for her, and that enthusiasm gap has been significant. That was the case in Iowa as well. So that could be a real factor here. Does the base of Trump feel more impelled to go out and actually go to the polls and vote today versus those who might not be as excited to go cast a vote for Nikki Haley? That said, on the other side of the coin,
오케이, 올라가죠. 하늘로 갑시다.
he's going to take this anyway.
기분이 너무 좋아요.
So it really is an enthusiasm factor in addition to the weather that we have to consider when we ultimately see what the numbers look like today.
Kelly, looking forward to the coverage later on. Kelly Knights there in New Hampshire. Look out, tune in to Bloomberg tonight, 8 p.m. Eastern Time. Complete coverage of the New Hampshire primary. AMH, let's talk about it. That enthusiasm gap is absolutely massive between the former president and Nikki Haley.
It's impossible to really run a primary with someone in your party who people feel like is an incumbent. And at the same time, Governor DeSantis, when he was leaving the race, he said, I was picking up steam. And then you couldn't get through the oxygen in media, given the fact that everything was pointed towards Trump and his legal troubles. And Trump made his legal troubles really an election campaign issue. He ignites a lot of emotion on both sides, which is the reason why they say that Nikki Haley's one path would be to sort of ignite the opposite of the love, but the alternative to love that some people feel toward Donald Trump. So this is sort of the question, is it a referendum on him? A lot of people saying you're seeing a coalescing Republican Party. I've got to say, I'm not that jazzed. I feel like people have moved on. I feel like it's sort of gotten this inevitability about it at this point.
You know what's amazing about this though?
문제는 이거 계속 유지해야 되는데 쉽지 않을 거예요.
Humongous. And that just shows you how deeply unpopular the current sitting president actually is. No one wants this outcome. I say no one to use that loosely, but ultimately you look at the polls, they speak for themselves.
Yeah, the polls show that Americans do not want a rematch of this race, but that's exactly what they're going to get. The next few months is all going to be about what does the Trump campaign look like in swing state vote versus what is Biden doing in swing states. And you're going to see a lot of visits, like you are this week, to Wisconsin, to Michigan, to these states that are must win, because that's where elections are won and lost. Forget the nationals.
Yeah, but what does it say? That the candidate that was so easy to win on the national stage looks so impossible to win on the primary stage, and that tells you a lot of the polarization that we've seen in different parties.
It's a question of why America chooses candidates this way. Why was $75 million spent in New Hampshire where there's 830,000 registered votes? Or why does the first caucus start in Iowa?
I think I should move to New Hampshire and just get a check.
New Hampshire?
Honestly, it's great skiing.
It's a good skiing. I didn't know that. Have you skied there?
Yeah, it's great skiing.
And you can vote in primaries and maybe have an impact.
Go and do the coverage tonight with the team. Kenny, nice dramatic.
I could head up. I'll be wearing my, balaclava.
Slopes afterwards.
Yeah, exactly. No, that's not.
Coming up on the program, Michael Gaitman of Bank of America looking ahead to some critical inflation data due out later this week and looking forward to a Federal Reserve meeting just around the corner. Before we get there, it's the ECB. Michael Gaitman thinks you get a rate cut as soon as March and you get a soft landing too. A conversation is just around the corner. Equity futures on the S&P 500 positive here by 0.1%. Yields are higher by 2 basis points, 4.1262. Consensus is maybe the middle of this year, but Michael Gaitman's got company. Jan Hansius of Goldman talking to our team in Hong Kong.
좀 떨어지네.
And a little more of the same. March cuts.
아직은
Soft
아직
landing.
것
What
같아.
else do you get? Ice cream? I mean, seriously, these are incredible projections.
Rainbows, unicorns,
Exactly.
and lollipops and all that good
That's where we're
stuff.
headed.
Soft landings and tons of rate cuts at all-time highs in the equity market. Coverage.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
뉴스 봅시다. 디케이는 계속 떨어지고 있네. 사실 지난번 주에 주식시장이 너무 분위기가 너무 좋았잖아요. 계속 다 올라가고 있었는데 그 중에 하나는 니케이가 계속 떨어지고 있었어요. 그 어디까지 떨어지나 싶어. 그리고 다른 영향을 왜 받지 못해 가지고 좀 더 궁금해서 뭐지?
Regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, we do something ourselves. Some teams are doing like local TV and streaming. How do you see that shaking it?
So, I don't think I'm right on this, but my instincts keep telling me this is
좋아요.
Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time move. And then they pivoted at the perfect time and they sold their content to Peacock. And that was really smart too because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
이거 봅시다. 너무 좋아. 돌아가고 있네.
Stocks on the S&P 500 positive here by 0.1% on the Nasdaq 100 going into the opening bell. About an hour from now, we're positive by a third of 1%. The Russell bets in fact up by 0.8. Talked about it all morning. It's not about the financials anymore, Pramo. It's about big tech a little bit later.
Netflix kicking off the big tech earnings later today at 4 p.m. Eastern, and then we get Tesla and Intel, and then next week we get really some of the big behemoths. The question is, how low is the bar, or how high is the bar at a time when this has really been the driving force behind the entire rally?
It's my favorite time of the year. You get the tech earnings and a Federal Reserve decision around the same time.
Is that sarcasm?
No, I'm serious.
I
I'm serious. You get tech earnings I prefer. I told the bankers in Davos this last week. I wish they would deliver the earnings after the bell and not before the bell all at once in the morning.
I know. I knew we were
You never
going
get
on
to
this,
read them. Then you've got a bunch of earnings calls, the market opens up, everyone's busy. In the afternoon, after the close, tech comes out, you can actually sit down and read the earnings and listen to the calls.
And that's actually going to be hugely instructive, because the reason why the U.S. has diverged from everywhere else, China in particular, has been because of the big tech names. And they've been the ones that have been leading. The key question to me, though, is are you going to see a broadening out in some of the earnings? Because we're also getting, I think, 5% of the S&P today reporting earnings. We got a bunch of the industrials. So around the margins, the next 2 weeks are going to be massive, just more broadly in earnings.
Luke Harry of UBS looking for that improvement of breadth in the equity market, just broader participation maybe. Want to turn to the bond market, 2-year, 10-year, 30-year. We'll be joined by a gentleman who's looking for a rate cut in March in just a moment. A 2-year at the moment, around 440, 439.97. Yield higher by 2 basis points on a 10-year, 412.24. Just to finish on foreign exchange, I keep reminding myself of this. I'm not trying to remind you at home. There is an ECB meeting this week. We're at 108.67 on the euro, negative by 0.1%. I'd forgotten, to be honest with you. This one's come around quickly.
We already had it last week. You pointed out. We had
Twice.
it a couple times with Christine Lagarde. They're not going to say anything, right? I mean, what are they possibly going to say that's going to move markets, given the fact that people are basically expecting them to cut rates in the summer, which is essentially what she said last week in her press conference with Christine Lagarde.
News conference round 3. It's going to be far more interesting. How many journalists are going to ask about the politics of the United States, whether it's appropriate to weigh in to US politics, a response to the reports around the dissatisfaction of the staff in some
포지션은 계속 유지해야 되나? 물론 지금 그 분위기가 괜찮고 계속 올라갈 것 같긴 한데 왠지 불안한 마음이 들죠? 봐요. 보니까 지금 계속 올라가고 있죠. 야, 이거는 너무 여기 떨어지고 여기 이렇게 올라가는 게 너무 너무 위험하지 않을까? 진짜.
We should send Mike McKee to Frankfurt this week on Thursday.
He'll still be last.
Get McKee to answer. Yeah,
He'll still have the last question, 100%.
Let's turn to your top stories. Under Savannah's this morning, United Airlines reporting better
계속
than expected earnings,
가보자.
but saying it expects to lose money as a result of the Boeing 737 MAX 9 grounding. CEO Scott Kirby venting his frustrations over Boeing management and its handling of the situation, even taking the issue to Transportation Secretary Pete Buttigieg. Where is Pete Buttigieg on this story?
Well, Pete Buttigieg is basically saying that they've conveyed to Boeing how they feel and they want to make sure they're getting answers.
계속 그 비행기 혹시 이 비행기 뉴스대에서 좀 들어보신 적이 있어요? 거기 비행기 멀쩡한 비행기인데 날아가고 있는데 갑자기 그 비행기 어느 부분이 그 뭐지? 그냥 막 떨어졌어요. 그냥 날아갔어요. 진짜 끔찍하지 않아요? 사실 그 부분은 문도 아니었어요. 문도 아니고 그냥 뭐 어떤 그냥 비행기의 벽 이런 거 있었는데 갑자기 날아가는데 근데 그 아나운서 분들이 계속 이런 얘기 하는 것 같아요. 아, 저 앞으로 그 비행기표 살 때 그 장문 쪽을 말고 그 뭐라고? 아무튼 그 쪽은 절대 이제 앞으로 그 표를 절대 안 살 거라고 했어요. 그 복도 쪽에 복도 쪽에서 계속 살 거라고 하거든요. 저는 사실 동의해요. 저 원래 전문 쪽에서 안칠 못해요. 제가 약간 배석공포증 같은 거 있어가지고 좀 숨이 막혀요. 그러니까 저 항상 복도 쪽에서 비행기표를 예약하고 있어요.
Divergence between what people want and what they're getting, and it seems like there's nothing that anyone can do.
Totally. Politics worldwide. Politics
100%
worldwide.
Put it very well.
You see it across the board. I want to get to this from Goldman. Chief economist Jan Hansier, speaking of Bloomberg, weighing in on the Fed's tightrope.
The Fed is on its way to achieving the soft landing. Obviously, no guarantees, but I like what I'm seeing.
That was Jan Hansier at Goldman, sticking with his base case for a March rate cut. The Q's, a still resilient labour market, consumer prices and comments from Chairman Powell about cutting before inflation returns to 2%. Here's another man who thinks you might get a March rate cut. This from Mike Gaper of Bank of America with the following quote. Look for a reversal of December's strength in January. Consumer spending may be healthy, but it's not surging or slumping. And we don't think the recent report that we got for retail sales says much about the Fed's ability to cut rates beginning in March, as we expect. Michael Gapen joins us around a table. Morning, Mike.
Morning.
March rate cuts, even with that data last week.
Yeah, we think the retail sales data was really influenced by the seasonals, right? The pulling forward of consumer spending into October and November and the difficulty with the seasonals adjusting for it. So we think it's more noise than signal, and it'll reverse in January.
What else is telling you that, given the fact that all the other economic data has also come in better than expected?
Well, I think that in this case, we can point to seasonals being about 2.2 percentage points more favorable this December than they were last December. So it should kind of wipe out any underlying signal. But beyond that, it's really what gets them to cut in March is the inflation. That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation and the fact that we're 6 or 7 months with annualized core PCE running at 2% or less. So as we roll into the March meeting, I think they get gradually more confident about the trajectory.
A March rate cut, and yet do you still lean into, or I know that you don't lean into this idea of 6 rate cuts, that you see something more like 4?
Early but gradual.
Right.
Yes, so 4 for this year.
How do they communicate what their goal is?
가보자 위로 가보자. 계속 너무 좋아. 여러분 추천합니다. 이럴 때는 해외선물 추천합니다.
How do you get a handle on what they're going to be looking for and how they're going to signal?
Well, you never truly know where the neutral rate is, right? And that shouldn't stop you from making decisions that you think are the right policy decisions. So I think what they will communicate is that we're on track for achieving 2%, and to avoid policy from getting too tight, we're going to follow inflation down. Doesn't mean we're easing. We're not easing in response to a recession. We're normalizing the policy stance, preserving some policy rate tightness, and guiding inflation lower. It's a little tricky because we've never done this before, but I think they can do it.
Bob Diamond sat in your chair yesterday. He
Oh,
said
마음에
the
들어.
bar is much higher as they come down than it was as they
오늘은 되는 날이에요.
Meaning that the
되는
closer
날이요.
you get to where you think neutral is, you should be a little more conservative. Yeah, I think that's right. But I think you heard that through Governor Waller's comments, right? That we should go gradual. It's going to allow us to be methodical and evaluate things as we go along. This isn't recession, cut early, cut fast, cut deep. This is move gradually and methodically, and yes, you'll have to find your way as you get towards the end.
If they're going in March, wouldn't you expect them to tee that up next week?
Not entirely. I think that they'll move to a more kind of balanced language, right? Which they'll remove, we think, the upside bias to the policy rate path and talk about future adjustments to the policy rate. So it'll be more two-sided. I think that's about all they can do. So remember, they see effectively 3 more inflation reports. They see the one this week, the one for February, and they'll get CPI, PPI heading into the March week. So they'll have between weeks. So there's a lot of data that
수익 20으로 갑시다.
This is the direction of travel. You heard something similar from Jan Hansius of Goldman Sachs as well. I give you another view from Marcus Planovic over at JP Morgan, which just looks to the tension emerging in the Red Sea at the moment and the prospect that we get a pickup of re-acceleration in goods inflation. Again, what would you say to that?
Certainly possible, but when we look at the data about where the U.S. gets its trade flows and its goods imports from, not a lot goes through the Red Sea, and we think that that type of impact could be pretty minimal.
I've read report after report about a reacceleration in housing markets, especially as rates come down, a reacceleration in a whole host of businesses in response to the expected rate cuts coming this year. Are we not talking anymore about the fact that the market's already priced in the rate cuts for the Fed, so basically we've already done it?
Well, that's right. So the Fed's just going to be essentially validating at least some of what markets are pricing in. And yes, there's a risk that they've shifted too early in this direction. And later in the year, the easing of financial conditions will cause things to be more robust than they want. But I think on net, we're pretty comfortable with saying the inflation data tells them they should be easing. We think that happens in March, and risks are balanced around.
On a scale from 1% to 100%, how high is your conviction about a soft landing? Why are you laughing at me? It's true. 88.2. We get that sometimes.
65%.
Really?
Yeah.
How much has that increased over the past couple of months?
Well, in the last couple of months, I'd say it's been about the same. I mean, really, the change for us was last summer, right? When we were one of the mild recession camp people, but the rebound in the supply side, the return of the labor force in large numbers really changed the scenario for us.
Just how weak is the labour market right now? I get so many conflicting messages about that. I think we sit around this table, we look at claims 187, which is remarkable. I've lost count of the amount of months we've stayed below 4% unemployment. Yet we've got a couple of people coming on the programme saying there's weakness emerging here. Do you see the same thing?
I think you can point to weakness in the narrowness of employment, right? Virtually all private sector employment is still coming from these catch-up sectors, the high touch, face-to-face, leisure, hospitality, education, and health. But I think the numbers are private payrolls have averaged 134,000 per month over the last 6 months, 127 of that from these two sectors. So employment growth in the rest of the private sector. And so the risk is if that catch-up effect fades much more quickly than we all think, does private employment slow down to zero? Do we get that recession? Or has the Fed shifted its tune early enough, the rest of the economy gets supported into the second half of the year, and we're going to go somewhere.
Is that what's driving this decision ultimately for the March cut, in your mind? Or is the disinflationary trends that have emerged there now? Is that sufficient?
너무 보기가 너무 좋아요.
But a little softness in the underlying data would certainly help their case to go in March.
Mike is going to see
진짜
it. Great
그냥
to have you back. Michael Gapin there.
이 돈을 가지고 그냥 여행이나 갈까? 여행을 갈 거면 추천해주세요. 지금 괜찮은 나라가 어디인지 날씨도 그렇고 약간 따뜻한 나라로 가고 싶어요. 지금 밖이 너무 추워서 어디 그냥 따뜻한 나라로 가고 싶어요. 태국이나 아마 어디 아시아 쪽으로 가는 게 괜찮을 것 같아요. 태국, 베트남, 인도는 안 되고 저는 완전 도시도시한 여자라서 그나마 조금 깔끔한 나라 있어야 돼요.
Shares of TKO Group are soaring in pre-market trading on the back of the news that Netflix bought rights to the show Raw. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, will the Fed begin to signal cuts?
I would stop quantitative tightening. I think that's just not a correct philosophy and policy at this point.
태국은 지금 제일 낫지 않을까요? 아니면 지금 너무 더운가? 아니면 뭐 어디 인터넷에도 괜찮을 것 같고.
Self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, transfer. We match. Offer ends January 31st.
We have this great connection about the love of baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. And I reached out to him and said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be...
어떡해. 갑자기 떨어지면 어떡해. 안 되는데? 지금 몇 시야? 10시 45분? 55분에 발표 있잖아. 갑자기 왜 이래? 안 되죠. 제 담보금을 계속 올라가야 되잖아요. 아니야, 떨어지면 안 돼. 어디 가요? 갑자기 깜짝아, 뉴스에 나오는 그 픽소리 있죠? 아우, 깜짝이야. 제 심장 소리인 줄. 그러다가 멈춰요.
From New York City, equities right now positive by 0.2% on the S&P 500. The opening bell is just around the corner with the yield higher by 2 basis points on the 10-year. 412.05. On the surveillance this morning, all eyes on Fed cuts.
I would stop.
아니, 너무 많이 떨어지는데? 어떡해.
It's just not a correct philosophy and policy at this point in time to continue to tighten quantitatively. They should leave the reserve balance around $7 trillion and just see what happens going forward.
PIMCO's Bill Gross weighing in on the Fed, the former PIMCO chief.
또 올라가.
Weighing in on what the Federal Reserve will do next. JP Morgan's Graham Israel seconding the motion, writing, we think that the Fed will taper QT in the next few months. The Fed is trying to finesse the lowest level of reserves to prevent a situation similar to the repo spike, at least in 2019.
I'm very curious about what's going to happen with the balance sheet. Instead, the conversation's been entirely
그러니까 제가 지금 차트를 너무 가까이 보는 것 같아서 가까이 보니까 이 움직임이 되게 크게 느껴져요. 물론 여기 봤을 때 별로 그게 안 느껴지긴 하는데 그래도 계속 올라갔으면 좋겠는데.
If you're trading the 2-year or the 10-year or equity or any asset class, what matters is the end. How much are they cutting for what is the reason that they're cutting? Are they trying to normalize or are they actually trying to reduce policy? I would argue the market's pricing these rate cuts. Where will they start in March or June? If they're going to cut all the way to June, I would argue they can actually start to lower. They think that long-term rates in a soft landing is 2.5. I would say 2.5 to 3%. Then that is still normalizing policy. That's actually good for risk assets. Bond yields have some more room to decline. If the economy turns and now they are cutting fast and they're cutting below that 2.5 level, then you've got to be really nervous that understands.
All right, and we'll get into exactly what could trigger that. But I am curious. One thing that people do say to me, the reason why March matters is because of the political backdrop. And they say there's no way that the Fed's going to be aggressively cutting right ahead of the election. It's going to be tricky. It's going to complicate things. So why not front load it and get ahead of it? Do you buy that?
I don't. I think the Fed has enough things to focus on. I think politics, it's difficult. They are going to get
dragged into the entire political debate. But I would argue they have a framework. They've got a dual mandate. Inflation is allowing them to cut. I mean, we're going to get inflation numbers. The 3-month, 6-month moving averages are running below 2%. That is their target. So what we're hearing from the Fed is, well, we can start. I think they can be slow. The earlier they start, and that's still a big question. I'm not convinced that they'll get enough. Let's see, the revisions will come out. I love Governor Waller brought up revisions and I know you'll be looking at it. For bond geeks, we look at revisions because the market always reacts to that the initial number. Let's look at revisions. If the inflation picture is still, we're still seeing immaculate disinflation. The inflation and I think they start, whatever happens with the politics, I think they start the normalizing.
어떡해. 그대로 계속 유지했으면 좋겠는데. 아니다. 다시 유지하면 별 소용이 없지. 올라가야지. 그치? 아니야, 갑자기 왜 떨어져? 어? 참 미치겠네. 아니야, 안 볼란다. 안 볼게.
Allow that soft landing to last. Whether they can do it, whether there's no non-linear effect that actually results in a recession, I think that's still an open question.
Let's get to the bond market call. 10-year right now, 412. We caught up in the last few months and you reduced some of your long duration exposure around 380. We're back at about 412. I think you were looking for 420 before you started buying again and going long. Is that right?
It is, but what's 8 basis points among friends?
Well, you tell me. Are we in no man's land or not?
I would argue, I think we're going to be in a 375 to 4.25 type range. So I think as you start getting to that 420, 425, I think adding some duration, particularly we've added to risk. And I would argue with the inflation backdrop, with the Fed saying that, hey, we can actually start to normalize, correlations between duration and risk assets are going to come back. We haven't had that correlation in a long time.
아직은 괜찮아요. 좀 애매하게 떨어지긴 하는데 아직은 괜찮아요. 아직 뻗을 수 있어요. 뻗을 수 있다고.
Look at all the investment grade supply that's actually coming to the market. All got taken down. Well, I think investors have been structurally underweight. As they are coming back, that 6 trillion sitting in money market funds starts to come into bond funds. That can mean even 412 is not a bad level. Maybe don't put all of it in, but start adding to duration. Anything above 4%.
When you talk about risk, are you talking about duration, or are you going full bull and going into high yield bonds?
발표 시작 3분 전. 이거 좀 버텨야 되는데.
So I would say even high yield, investment grade, the high quality high yield, I think is attractive. Securitized credit.
그 이후로 계속 올라가야 되는데. 봐봐요. 지금 딱 좋아.
There's going to be zombie companies in there. Try. It's hard. Make sure you don't own any of that, or at least try. But I would say
올라가자. 이분 나왔다.
Well, bullish risk assets. It's been a while. I would say because the Fed was raising rates significantly and inflation really surprised me. The supply side came back much faster than I thought. And the Fed, I think, took that opportunity faster than I thought. I mean, in September, they were talking about higher for longer. And I was thinking, there's no way they're cutting rates until the end of 24. They've opened that path. So I guess I'm more bullish risk than I remember for a long, long time. Or since real rates went into positive.
Something you said just a moment ago jumped out for me. You said something like, we're in a soft landing right now. The right now piece of it. I remember when you were talking about a hard landing.
1분 전. 1분 전 올라가야 돼. 제발 오늘 되는 날이야. 무조건. 무조건. 나 그렇게 믿고 있어요. 믿고 싶어요.
35%, I think, 40% chance of hard landing, I think is still there. Because when you look at the details of the data, it's not all that robust. You start looking at the narrowness of the labor market, or the fact that, there's pockets of weakness elsewhere. So I would say there is a chance that things slow down, or the Fed doesn't cut fast enough, or they continue QT long enough. And that's when that chance of something going wrong, I think we always have to be positioned for that, and I think it's there by you.
It sounds like you believe there's a window here to be constructive risk. And what I would like to know from your perspective is what it looks like when the window starts to close. What are you looking out for?
So So beyond data, I would be looking at, again, every revision, the details of every economic data. But beyond economic data, what I'm looking at is real rates. If real rates, 10-year real rates get back to 2% or higher, that's restrictive. I mean, I know we talk about financial conditions all the time. Financial conditions are restrictive. That window starts to close if they stay restrictive or they become more restrictive. And that's going to depend on data. It's going to depend on what the Fed does. And that's when I'll get nervous that they did not cut rates fast enough and that restrictiveness is going to show up. Remember, we've had that lock-in effect. The lags are much longer because we are locked in a low level of rate, corporates, households. When that lock-in effect starts to go away and you have to start paying those real rates, that's when...
Well, Lisa can enjoy a 2% mortgage for another 25 years or something like that.
Right,
She's going to keep reminding us about it.
All the
Priya,
time.
it's good to see you. Priya Misra of JP Morgan Asset Management. Are you happy that Priya put a number on things for you?
I actually think it's hilarious because we now have consensus. We've got JP Morgan and we've got Bank of America. 35% chance things go bad, 65% chance that we've got rainbows and unicorns.
True, it's true. But in the meantime, the window's there. Buy risk.
Exactly.
Buy credit.
And the most bullish on risk that Priya's been for a while. That's interesting.
Didn't get to politics though, did we? No. Good reason, probably. New Hampshire, the primaries, that's what's to watch a little bit later on this evening. The team's going to guide you through that at 8 p.m. Eastern Time on Bloomberg Television tomorrow. Absolutely stacked program on Bloomberg Surveillance. We'll catch up with the IBM Vice Chair Gary Cohn, former House Speaker Kevin McCarthy, Kathy Jones from Charles Schwab, Citi's Andrew Holmhorst. All of that still to come as we count you down to the opening bell. 34 minutes to go. Equity futures just about positive on the S&P. From New York City this morning, good morning. This was Bloomberg Surveillance.
This close.
We've touched this case. Detective, not controlled. Streaming exclusively on Max.
Relevant about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
The younger generations are more, of course, pay more attention to sustainability. And so they are looking at brands that are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
From New York City, for our viewers worldwide, I'm Manus Cranny in for Jonathan Farrow. Equity markets showing a peak of green. They're holding on for the hero that is earnings from tech. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up in the show, stocks flirt with another record as the earnings season starts to heat up. China considers a $278 billion rescue package, and its GOP showdown in New Hampshire with Trump versus Haley. We begin with a big issue, attention turning to tech.
It's all about earnings at the moment. Tech earnings are supposed to be up in double digits.
The tech sector has done very well last year.
We had the big AI boom pushing through earnings for tech stocks.
What drove the market last year was that magnificent seven.
Tech stocks have been able to deliver.
The bar has been set incredibly high. Expectations could be on the higher end, and that could be a risk.
I am broadly positive.
Earnings expectation is likely to be justified.
I still think they're going to be one of the fastest growing sectors.
The enthusiasm for the Magnificent Seven will continue.
The equity market is looking at the strength of earnings.
Earnings deliver, markets can move a bit higher.
This is the most important earnings slate that we've had in a very long time.
Joining me now is Morgan Stanley's Mike Zazas and Winnie Caesar from Credit Insights. Tech. There's a frenzy. There really is quite a frenzy in this market this morning, and we are now down to depending on tech to deliver. When you look at risk, to me it feels like a coiled spring. Michael, you would say we've got to thread the needle and there's very little room for error. With that in mind, how important is the earnings in this part of the risk cycle?
I think it's important, and listen, I think this is a really interesting time to be looking at tech and considering AI in the sense that there's about $6 trillion of market cap added last year for what we call kind of AI enablers, and this is a year where kind of like the rubber should meet the road, and we should be able to see if a lot of those use cases are actually going to add value. I mean, as it pertains to equity market impacts, though, and translating it back into fixed income, I mean, listen, I think the equity market is already kind of priced in a lot of ways for this idea of a soft landing, fixed income less so. And so to us incrementally, right, unless AI is driving this really, really major uplift, then I think a lot of the incremental opportunity or sort of more reliable return opportunity is going to be in fixed income this year.
Okay, the flow from money markets into fixed income, and that is a narrative that's been building. Winnie, good morning to you. You said a good chunk of the performance has already been brought forward. It's been brought forward in the equity market, but it's been brought forward in the fixed income market. Are we richly priced on credit?
Good morning to you as well, and thanks for having me. So we're actually at our year-end targets for both U.S. investment grade and high yield, and we really got there pretty much by the end of 2023. So we pulled forward performance by almost a full year. Now, it is quite typical to see a lot of performance realized in the first few months of the year, and I think especially true this year when you do have a back half with political risk and the Fed risk and all sorts of different storms possibly brewing. I think that the expectation was to have a pretty good January, February, and then people sitting on their hands a bit more. But the fact that we realized so much performance really in November, December of last year has left a lot of people wondering kind of where do we go from here? And we've actually been recommending to clients that we should take a pause and be tactically a bit more cautious despite having a long-term constructive view on credit.
Okay, so I like that phrase, tactically cautious. Now, this is going to come down to the differential between what the market is pricing in cuts and what the Fed actually delivers. Let's just listen to Jan Hatzius. He weighed in on this very subject overnight in Hong Kong.
The Fed is on its way to achieving the soft landing. Obviously, no guarantees, but I like what I'm seeing. A March cut or cuts in general over the next few months under our forecast are somewhat optional. The economy is holding up, pretty well. We don't think it's essential that they cut here, but it would be consistent with the signaling.
So let's turn that into what you both think. Michael, one narrative that's been building through the morning with me, I had Alberto Gallo at the start of the day at 5 a.m. He said, you're going to get a couple of insurance cuts, but you're not going to get dramatic slowdown cuts, and the window closes because of politics after Labor Day. Do you think we're going to get insurance cuts or slowdown cuts? Michael?
Well, listen, I mean, our economists think you're not going to get the first cut until June, but I think for fixed income investors, you got to take a step back here. And the big picture is that inflation's coming down. The Fed, the ECB, the BOE, they're all sort of skewed towards cutting. Really, the question is kind of when and what pace. That should be a really good backdrop for fixed income investors in general, and then developed market government bonds in particular. And here, I think we flagged at the beginning of the year, we thought there was 10% plus total returns in that cohort. We've gotten a lot of them already, but we think there's probably still 5 to 7% to go. And just based on the idea that soft landing or not, if central banks are cutting, maybe things in the short term aren't priced exactly the right way you want in terms of the probability of cuts in the near term. But over the next 6 to 12 months, we think the direction is pretty clear towards lower yields.
Okay, I mean, 5, 6, 7% is still worth taking. Winnie, let's just close it off with you before I pivot to China. These rate cuts delayed to as late as June in your mind and then compressed?
So we had been saying to expect the first rate cut in March, which back in October felt really risky. And then we were very surprised to see how materially the Fed pivot in messaging was in December. And I think that this really highlights one of the problems the Fed has with communications, in that the market is going to very aggressively price in whatever policy path they're expecting, even if the Fed is not going to go that quickly. And that does result in a loosening of financial conditions, which we've seen materialize over the past few weeks. And so now we're thinking that actually the probability of a March cut might be a little bit lower than what the market is pricing in. And we think that especially the upcoming January meeting, the messaging might be a little bit more hawkish, a little bit more disappointing, because in aggregate, at the headline level, the economic data have not really supported a potential easing. But we do think a Fed cut comes in the first half of this year.
They don't want to lose the win that they've got from Waller and Bostic from last week. Let's turn our attention to China. Bloomberg learning that Beijing is considering $278 billion package to stabilize its slumping equity market. Bloomberg's Mike McKee joins me now. So this is not a bazooka for the economy. This is a floor for equities, Mike.
Well, at least that's what they're hoping. You're talking about the U.S. cutting rates. In China, they have moved monetary policy, but it hasn't moved confidence. A picture is worth 1,000 words, or maybe a couple of trillion yuan here. You can see the CSI 300 and the Hang Seng. They have lost 10% and almost 7% on the year, and that just builds on what they lost last year. It's been an elevator down for the Chinese stock market. So people familiar are telling Bloomberg News that the Communist Party, at least, is planning a rescue package to put a floor under the market, 2 trillion yuan, as you said, $278 billion, from offshore state-owned enterprises, from cash they're keeping out of the country. Brad Setzer asks, why is that money out of the country? They really want to bring it back, which is an interesting unanswered question. But they would bring it back, buying onshore stocks through the Hong Kong exchange link. There is also a plan to spend 300 billion yuan, $42 billion from local funds. They'd buy onshore stocks through government investment funds, primarily through Shanghai. We also heard that regulators are guiding, in their words, insurance companies against short sales. Is this going to work? Well, along with Brad Setzer, there are a number of other people who think this is a questionable program. They point to 2015 when the Chinese government put money into the stock market. And as you can see there, stocks went up for a little bit, and then as soon as the stimulus went away, stocks went way down. They introduced a circuit breaker, that's the blue line there, and that really killed the market. So given the fact that the U.S. now has sanctions on China, along with other countries, and the fact that the Chinese economy is really struggling, the housing market's in bad shape, a lot of questions about whether this is actually going to do anything, maybe provide a floor, but maybe not.
Okay, well, that is the debate for the equity market and the economy. Mike McKee with the very latest on China. Mike and Winnie, look, it's very interesting. I arrive in this country and we don't talk about China at all. The time zone shifts dramatically from the Middle East, London to the Middle East to here. It doesn't matter till it matters. This morning it kind of matters. $300 billion to put a floor under the equity market, but it's not a bazooka for growth. What are the ramifications of what China does, the world's second biggest economy, to investing here? Mike?
Yeah, I mean, listen, I think the mechanics of this particular move is still something that we're sorting through, but I think the big picture is that China growth is slowing. China's sort of shifted its economic strategy anyway in a way that you wouldn't necessarily rely on it to be this major engine of global growth anyway. And it's all part of a confluence of factors that's helping to drive down the pace of inflation in developed markets, and I think feeds right back into the idea that we could be getting good returns, i.e. lower yields over time this year through most of the developed market world in government bonds.
And for you, Winnie, I had one guest this morning that says China's uninvestable from a government bond point of view. I don't think anybody out there, given the injuries they've had from equities to bonds, would disagree. Extrapolate the move this morning for global disinflation.
So I think for global disinflation, we can, pretty confidently say that the Chinese government is trying to kickstart their economy. They have had a lot of stimulative efforts in place. The big difference is that these stimulative efforts that we've seen over the past, call it 6 months, have not jump-started things like they have historically. And I think that ultimately comes back down to the property markets. And when we're thinking about the path for global inflation, commodities are going to be a pretty key aspect, and one that the Fed has less control over because there are supply-side constraints there. So if we still have China kind of trundling along, not necessarily really ramping back up in growth, I do think that is pretty positive for the commodity side of things in terms of not going too overheated.
You see, China does matter. It can make it into the conversation. It is relevant. Michael Zizas, Winnie Caesar, stay with me. We've got more work to do. Let's look at what's going on under the hood. Abigail Doolittle is with me for the movers and shakers. Abby.
Well, we are potentially looking at a fourth up day for the S&P 500 in a row. Very small gain at this point, but we have one big gainer into that open. United Airlines up 6.6%, heading to, I believe, its best day of the year. Right now, they beat earnings by nearly 20%. Revenues, they beat too. They offered new guidance that wasn't the massive profit slash that we saw out of Delta. In addition, growth is just right, not strong enough that it can actually support fare hikes. D.R. Horton, not so much, down nearly 5%. They posted weaker than expected new home orders. A look forward into what people want to do in terms of buying homes, but also a look back on those 8% mortgages. The stock was up over 65% over the last year, just not good enough, those results. So, and then GE down 2.3%, profits for this quarter of 60 to 65 cents, shy of the 70-cent estimate. All of this, of course, ahead of the breakup. They are spinning out their aerospace and energy businesses later this year in a bid for a multi-year turnaround.
Okay, Abby, thank you very much. Come fly the friendly skies. Obviously, it worked for United. Coming up, GOP presidential hopeful Nikki Haley is getting ready for her make or break moment in New Hampshire.
Republicans have lost the last 7 out of 8 popular votes for president. That is nothing to be proud of. We should want to win the majority of Americans. But the only way we're going to do that is if we elect a new generational conservative leader.
We head to Manchester for the latest. Bloomberg team are on the ground. This is Bloomberg.
Do you think there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well? Or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised.
And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Your fixed income fix. Watch Bloomberg Real Yield at its new time Friday at 12 p.m. Eastern right here on Bloomberg. Context changes everything.
We've been invested in AI since 2016. There's definitely some hype today. We've had many conference calls littered with AI references and partnerships, but there were no real products or cash flows tied to these. On the flip side, you have companies that have durable business models that are seeing earnings growth tied to AI. If we've done the work correctly, we can identify the winners and stay invested over time.
In his administration. But rightly or wrongly, chaos follows him. You know I'm right. Chaos follows him.
It's showdown time. Donald Trump, Nikki Haley head-to-head in the New Hampshire primaries. Polling showing the former president has a commanding lead over the former UN ambassador. Another blowout win for Trump could all but secure this nomination. To New Hampshire we go. Kaylee Lyons is on the track. So there's already been a little bit of overnight voting in, what's it called, Little Dixie? I'm learning so much about America, it's killing me. So where do we stand, Kaylee? Good day.
It's Dixville Notch, Manus. Only 6 votes were cast there, roughly around midnight. All 6 actually went to Nikki Haley, but we're not entirely sure that that's how the rest of the votes in the Granite State are going to go today. Yes, this is a 2-person race, what Nikki Haley says she wanted all along. The question is going to be, come tomorrow morning, once all the votes are in, will it still be a 2-person race? Because Haley has said New Hampshire, given the large chunk of independent, undeclared voters here, is her best chance to eat into Trump's lead as the front-runner and presumptive Republican nominee. The thing is, she and her team, her surrogates, like Governor Chris Sununu, have suggested all she really needs is a strong second. The polls suggest that that second may not actually be that strong. Suffolk University and the Boston Globe have a daily tracking poll running. Today, Trump is ahead by 22 points, with 60% saying they will vote for him. Only 38% will vote for Haley. Now, a large part of this may come down to turnout. The Secretary of State here in New Hampshire, David Scanlon, has said more than 320,000 voters could show up to the polls today, which would be a record for a Republican primary here in the Granite State. And it will likely be a higher turnout vote that strategists think could make more so a break in Haley's favor. Yes, it is warmer here in New Hampshire than it was in Iowa by about 45 degrees. That could play a factor, but it's not just weather. It also is enthusiasm. And data consistently shows that Trump supporters are far more enthusiastic, more energized to get out and vote for him than Haley's supporters are for her. So we have to consider that. And one final note, I would say, Manus, it isn't just the Republicans having a primary today. It's Democratic primary day as well. Incumbent President Joe Biden is not on the ballot, as he and the DNC have said South Carolina should be the first primary because of its more diverse voter base. So there is a write-in campaign instead for the president and other candidates in the mix as well, like Congressman Dean Phillips, the Democrat from Minnesota. So there is a question as well to what kind of showing President Biden could put up here in the Granite State today, and whether or not that number, if it is low, suggests that he is a weaker candidate as we move forward to what very well could be a general election matchup between him and former President Trump. Manus.
Yep, he's banking on the write-ins, and of course the Right Honourable from Minnesota could indeed scoop up a few votes and sort of rock the Democratic cradle. Katie, thank you very much. Katie Lyons in Manchester. Mike Zezas and Winnie Seja are my guests. So here we are. We're careering, in theory, towards a Trump on the ticket. That's sort of what all the polling is showing. But what was pointed out to me this morning, which was interesting, it's perhaps more important, we're going to deal with the fiscal side. You're both bond at heart, bond and credit investors. So the risk is, the political risk is not just Trump in the White House, but a Republican Congress which has a much bigger impact on the fiscal scenario and therefore the bond flow. Mike.
Yeah. Yeah, so listen, I think it's important not just to know which party takes control of the White House, but also Congress, right? And if you have a scenario where one party is in complete control, that opens up a lot of fiscal expansion opportunities. In a scenario where Republicans are in complete control, you could pencil in a decent amount of fiscal expansion by extending expiring Tax Cuts and Jobs Act provisions. That said, there's cross currents even in that situation, because there's potential tariff policies on the table. Candidate Trump's talking about a blanket 10% tariff, and there's uncertainty around what it would mean for international commitments for the U.S. That could snarl supply chains and the like. So I think you could put some expansion on the table in that hypothetical. I don't think it's necessarily a straight line to make some strong conclusions yet anyway about what it would mean for the bond market.
Okay, so look, it's still a bit early, and I grant you, you're dealing with slightly more known quantities, both in terms of rhetoric, policy style, and ability to execute. Winnie, here we are, we're at 4/12. We could have a very different narrative coming from the Trump campaign if the polls are to be believed between now and the end of the year. Would that shake the bond market, or is it just too soon to get the bond market really to blink? Do we just trade 375 to 325?
So we do think that there is some near-term risk to the upside, especially in long-term yields, if the fiscal conversation becomes front and center again, which it clearly was last early August when there was the Fitch rating downgrade. We had Treasury refunding announcements much punchier than expectations. So if we have a return to expecting perhaps a Republican sweep or a Trump as president again, then you might see some loss of confidence again around the fiscal side of things, especially for investors outside of the US. And one of the big differences in the potential Trump presidential campaign this year versus in the past is that yields are objectively higher around the globe, which means that non-US investors have opportunities to put capital to work at pretty enticing yields, not in US Treasuries. And that is something that we see as a meaningful short-term risk, as many clients are positioned for yields to remain pretty range-bound in the near term.
The one thing I want to close off with both of you, Winnie, let's start with you, which is we simply are not really pricing any kind of a hard landing. There is this narrative, soft landing, 1995, no landing, etc. But hard landing, we just finished a conversation with JP Morgan Asset Management. They're ascribing 35% probability to a hard landing. Is it in your cast of characters, or what percentage would you ascribe to a hard landing? Winnie?
So we have a hard landing in the 15 to 20% probability range. But I think even more importantly is we have the potential for a stagflation type outcome also in our cast of characters. And that to us is the worst case scenario for fixed income or for US corporate credit, because that means that yields are going to be maybe even higher for even longer than people are anticipating. Right. And you're going to see this rolling default cycle that's going to be much more challenging to manage and much more difficult for the Fed to manage. They don't have necessarily a playbook for stagflation. They do have one for a hard landing.
Okay, an interesting differential. Mike, let's just finish it off, wrap it up in 40 seconds. The hard landing stat for you.
Yeah, I mean, soft landings are base case, but hard landing is probably the next most likely. I mean, right now in our base case, we like developed market government bonds and corporate credit. If hard landing looks like it'd be more likely, we'd obviously leaning more on government bonds than on credit. Even there, we think IG corporate credit in the U.S. would probably still do pretty well because you're coming in with relatively clean balance sheets. But certainly, we'd want to avoid high yield more in that scenario.
Okay. Team, thank you very much. That's Mike Zizas and Winnie Caesar on their calls for the markets. And I'll give you a slew of morning calls in just a moment.
Transfer a self-directed individual brokerage account over to Robinhood and receive a one-time match bonus of 1%. The larger the transfer, the larger the match. You transfer, we match. Offer ends January 31st.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. And I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Just holding on to a slightly broader bid to the Russell 2000. The rest of the markets holding on for Netflix and the other tech numbers to come in. Let me give you some of your morning calls that are going to set the agenda. We've got the analyst recommendations. This is what we've got for you. First up, JP Morgan cutting his recommendation on Coinbase to underweight. Analysts say the enthusiasm around crypto ETFs could deflate. Next up, Chevron getting a downgrade by TD Cowen to market perform. The analyst says that the Hess deal may not contribute to the oil giant's bottom line until 2027. And finally, satellite radio company SiriusXM is getting a downgrade from Wells Fargo to underweight. The analysts see weak subscription revenue. Coming up on the show, Calvin C. of BNP Paribas discusses why he believes the market is pricing an overly optimistic earnings season.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. We will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Good faith bigger challenges next.
It was going to keep reading World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond. Equity markets quite literally holding on by their fingernails for the hero that are the technology earnings. Look at that. See who's opening the opening bell? There you go. That matters probably more to the sentiment. There you go, Mr. Johnson. Equity markets are, as I say, trying to trade high. You've got these bond markets debating where they go next in terms of yield. We'll see what Netflix delivers in numbers. They're already doing deals this morning. We'll talk more about that in a moment. Euro dollar, that is down by 1/8 of 1%. 10-year yield straight flat at 4.1320. A lot of the juice is already in the equity market and in the bond markets. That is the narrative from our panel of guests this morning. Oil drops by 0.7 of 1%, 74.25. There is one stock to watch at the open. United, the airline, beating on expectations for this year, the outlook, despite the hurdles being presented to them by Boeing. Come fly the friendly skies with Abigail Doolittle and United.
I plan to be flying those friendly skies in the not-so-distant future. Manis, love to travel. As far as shares of United, they're flying high, too. Excuse the pun. The best day since April of last year. A relief rally in some ways because Delta, not so long ago, in terms of their quarter, they guided down relative to profits. That's the opposite of what United did, as you just mentioned. So the quarter that just was, they put up earnings of $2 per share, 20% or thereabouts better. They beat on revenues. Relative to the guidance, they gave new guidance for 2024 of $9 per share to $11 per share. The estimate, the consensus at $9.45. So the midpoint above that. Some analysts saying it's very important, especially given all the problems with the MAX planes, the fact that they were able to maintain and give guidance that could potentially be better than what the street was looking for, that is really very positive. In general, analysts are positive, saying that this was a strong beat for the end of the year, that guidance seems very solid, and that one analyst in particular over at Citi, Stephen Trent, saying that this is further evidence that U.S. network airlines, the big airlines, have traded places with the discount carriers. As for the stock performance coming into this, United Airline underperforming two of those other big airlines, down about 21% relative to Delta, down 5%, and American Airlines down 16%. But probably now, after today's big performance, at least right now, Manis, it's probably trading a little bit more even to American Airlines, but still some work to do to fly positive on the year.
Okay, Abby, thank you very much. Let's stick on the earnings front. Johnson & Johnson beat most of the estimates, with medical device sales and pharma revenue driving the profit. Katie Greifeld is with me now. Johnson & Johnson steams ahead. What drove the numbers?
Well, there was actually a lot of good news here. You take a look at the shares, you're not necessarily seeing that. But to get specific, fourth quarter earnings, they actually beat most expectations. That was thanks in a big part to medical device sales and better than expected pharma revenue. Two areas with plenty of high margin opportunities, which bodes well for Johnson & Johnson. CFO John Wolk also said that Joe Wolk, rather, he said that, quote, large M&A does not scare us, and that the company is considering pharma deals. So a lot of movement going on at J&J. Shares currently lower, though, as you can see, by about 2%. We'll see how long that lasts, given if you take a look at the sell side, pretty positive on this report. Citi, for example, saying that the strength in the firm's medical devices unit bodes well for peers. You also have JP Morgan saying that the numbers highlight healthy underlying trends for J&J's business. So stay tuned, but currently down by more than 2%.
Okay, we'll keep an eye on that. Katie, thank you very much. And tune in to our interview with the CFO at 10:40 a.m. Eastern Time. What level of AI overlay can he put into Johnson & Johnson? That might help the stock. Different earnings outcome for Dr. Horton, the home builder, reporting weaker than expected quarterly orders amid high rates. Natalia Kanijevic joins me now with more detail, down 4.43%, so a bit of pressure there.
That's right, Manis. So quarterly earnings came up 35%. That sounds year over year. That sounds like a lot, but it was an easy comparison, and the number came below expectations. EPS also disappointed, but at the same time, the U.S. home builder was very optimistic about this upcoming selling season this spring. They also slightly increased forecast revenue for the full year. So 2023 was a very challenging year for the U.S. housing markets. rates were elevated, and it's pretty much understandable because who wants to buy a new house when mortgage rate was about 8%, and if you bought it, especially during the pandemic when rates were at 2%. So now mortgage rates are coming down. Big U.S. home builders are using incentives. They have an opportunity to provide lower rates for customers, somewhere around 5%, and it helps them a lot. So as mortgage rates moving down, we see this increase in U.S. home building sentiment. In January, it spiked by the most in nearly a year, and we see that it's still actually slightly below pre-pandemic levels. During the earnings call, the company also said that they will continue using incentives and they are ready to reduce prices for homes and also reduce square footage when necessary just to boost sales.
There you go. Trying to get those houses off their lot. Of course, it's D.R. Horton, not Dr. Horton. Irish humor doesn't go a long way in New York, does it? Natalia, thank you very much. Another earnings number for us to keep an eye on. Procter & Gamble, the consumer goods company, missing the estimates as volume continues to slip. So where was the slippage? Simone Foxman can give us the details. Stock 5.5% higher, Simone, so talk us through it.
Yeah, there were some mixed messages here, but the analyst class clearly reading the positive ones, and that's why we're seeing shares up well over 5% this morning. This is the maker of Bounty paper towels, Downy fabric softener. Saw that organic revenue miss. That was where we saw some pressure. Beauty sales up 1%. Everyone had expected that they would be up 3.8%. Baby and family care also falling short of estimates, and the company complaining of a slower than expected recovery in China. All of this weighing on overall sales. Overall net sales, $21.4 billion. The expectation had been $21.6. That said, the positivity here, all because the profits were really okay. They were still able to boost prices 4% year-on-year, margins significantly better than expected, and their profit outlook for the full year ending June 30, that was also on the high end of estimates. They'd been talking about 6 to 9% growth, now saying they're going to see 8 to 9% EPS growth, even though their sales are going to be on the lower side of expectations. For retailers broadly, we're seeing them try to play off a wary consumer that's overall spending less with juicing their margins and overall delivering higher profits. That was what's happening here. Bloomberg Intelligence saying this profit beat, easing commodity costs and improved volume trends, all of those things are underpinning their confidence on the company achieving its guidance. Citi also saying these were solid results, and that optimism being reflected in early trading, Menace.
Okay, Simone, thank you very much, Simone Foxman there. Let's turn to our guest now. It is Calvin C. at BNP Paribas about weighing in on earnings. He gave it to another newspaper, but we won't hold that against him. Here we go. The market is looking for a re-acceleration in earnings growth to 12% this year from 3% last year, and this looks a little bit too optimistic in the environment where we expect growth to slow. Calvin, good morning to you. So I've been saying all morning, I'm sort of channeling a song from the 1980s. We're holding on for the hero that is the earnings, specifically from tech, really to give us a little bit more alpha. You are doubtful. Why are you committing this crime of doubt?
Sure, thanks for having me, Manus. Our main message is that we think the markets are too optimistic for this year. If we look across asset classes, including in equities, it looks like the markets are perfectly priced for a soft landing in the United States. We expect that landing to be a bit bumpier. We're expecting growth to essentially be flat in the first quarter, looking for a small contraction in the second quarter, and that is an environment that we think is going to be quite difficult for the markets to meet their earnings expectations. As you said, the markets are looking for an acceleration of earnings this year from 3% to 12%, which we find hard to see in an environment where growth is slowing.
Now, you did say to another newspaper, despite all the enthusiasm that we've seen in stocks right now, we're inclined to go the other way. Now, what does that mean? Does that mean de-risk? Does it mean short? Does it mean hesitancy? Translate for me.
Sure, there are different ways that we like protecting the downside. One is options at the moment are quite cheap, so we like buying downside protection. As well, there are certain pockets of the market we think that make overwriting strategies look quite attractive. In other words, if you cannot go short the market, you could own your stocks, but at the same time sell topside calls, and that allows you to collect some premium, earn some income, while at the same time being in the market. Again, as we don't expect the markets to trade significantly higher from here, we think those kinds of strategies make a lot of sense for investors who need to stay invested in the market.
And to a certain extent, we're having a debate this morning and every morning about the timing and the type of rate cuts that come. So this morning so far, we're going to get insurance rate cuts from the Fed, and maybe that's 2 cuts, and then the window closes as of Labor Day for them. Does that sound about a base case for you? Because you're quite bearish in terms of the number of cuts and the timing.
That does not really resonate with our own views. Our own view is that the Fed starts its cutting cycle in May of this year. They cut 25 basis points that meeting, and they cut 25 basis points for every meeting for the rest of the year. So we're looking for 150 basis points of cuts this year. And while that may seem a lot, the Fed is only forecasting 3 rate cuts for this year. We don't think it's that extreme, especially when we're thinking about policy in real terms rather than nominal terms. We're expecting quite significant deceleration in inflation this year. And as that occurs, the rate cutting regime that we envision basically keeps real rates steady. In other words, it's not adding a ton of accommodation into the market, but if the Fed didn't cut consistently, we think, in the back half of this year, it would push real rates higher, which would actually tighten conditions, which is something that the Fed probably wants to avoid in a scenario, again, where we see growth slowing down this year.
So if that's your view in terms of rate cuts beginning in May, we go 1 each meeting then, how do you think this plays out then for the curve? Because that is a series of rate cuts not predicated on any massive implosion in growth, I'm presuming. It's the fabled soft landing and behavior in inflation. How do you see the curve reflecting then?
Sure. So for this year, we don't think the markets are that mispriced. We're forecasting 150 basis points of cuts. The markets are forecasting about 135, so we're not too far off. Where I think the best opportunity on the curve lies is not for 2024 pricing, but where the markets have priced for the endpoint. In other words, the terminal level of cutting. And what's really interesting to me is that the markets have pulled forward rate cuts quite aggressively over the last few months into this year, but that endpoint has been pretty steady. And we're currently around 3.35%, and we've been hovering in that 3.25 to 3.5 range for quite some time. That's another sign to me in the rates market that the markets are, again, very optimistic, because the Fed's view of where neutral policy setting is, rates that are neither restrictive nor easy, is at 2.5%. So the market's expecting the Fed to end close to 3.5, suggests that in the rates market as well, the markets are looking for a very soft landing. We expect that landing to be a little bumpier than the markets expect, which is why our own forecast is that the Fed ends its cutting cycle at 2.75%. Therefore, because of that, we like positioning in the belly of the curve, and we like steepeners looking for 5-year to outperform the 10-year.
Yeah, and this is a building narrative, not just now, but certainly before Christmas and onwards, which has been, go for the belly of the curve. I look at risk, and to a certain extent, there's this a phrase that we had over Christmas time, this weaponized FOMO. And to a certain extent, I want to get a sense from you. Do you think that these markets look as if they're being careless or reckless in any way in how they're pricing equity risk?
I wouldn't say the markets are careless or reckless. What I would say is that the markets are optimistic, and the markets are very positioned in a way that is quite different from last year, where last year positioning was light, earnings expectations were weaker, especially as everyone was looking for a recession, while at the same time protection was well bid. This year, basically everything's flipped on its head, where positioning is now long. We think that earnings expectations are too lofty, while at the same time that reach for protection isn't there. So an indicator that we look at is skew in the S&P 500, the cost of puts relative to calls. That's at a historically low level, suggesting that investors are not looking for that protection. And this overly optimistic market environment, we think, is one that suggests room for correction lower.
Okay, and that, if we scale back a little bit on that, maybe all those hedges, as you say, will work if you write the calls out of the money calls and maybe pick up a little bit of cheap volatility. Calvin, let's see how it plays out. Calvin C., BNP Paribas, my guest this morning on Markets. Netflix will deliver their numbers, kicking off with big tech earnings after the close.
They will still continue to deliver growth, of course, supported by these structural tailwind that is artificial intelligence.
Big tech better deliver on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua.
For the EPS growth. So I do think that this earnings expectation is likely to be justified. They will still continue to deliver growth, of course, supported by these structural tailwind that is artificial intelligence.
Jenna Mew there of RBC Bruin Dolphin giving her outlook for the tech earnings season that's really going to kick into high gear. Netflix brings the bacon home today, getting a boost after announcing they're going to pair up with WWE for the first big move into live events. Netflix are paying $5 billion for the exclusive rights to wrestling content, and there's potentially more good news on the way. The analysts expect Netflix to beat its own forecast for subscriber growth when they report after the bell. Geetha Raghunathan joins me now. So we caught up a little bit earlier, and you've got some pretty punchy numbers penciled in for subscriber growth. Let's start there.
Yeah, absolutely. So, expectations going into the fourth quarter, Manus, are pretty high. This is a seasonally strong quarter good, solid content lineup. And of course, they have their two big initiatives which have been in play through most of this year. One is, of course, the new advertising tier, which is, much more economically priced. And the other one is the password sharing crackdown. And both of those initiatives are not only expected to yield new subscribers, but going into 2024, it's going to be about how they play up the revenue reacceleration story. And you brought up an excellent point with the Raw deal, because that really speaks to their scale or the ambitions that they have for their advertising business.
Live wrestling. There was a huge cheer went up in the newsroom every 2 weeks there. That's it. Wrestling reigns in the New York newsroom. Geetha, thank you very much, Geetha Raghunathan there. Bloomberg Intelligence will bring you those Netflix numbers. Of course, and let's stick with the deal, the WWE. Nick Khan, WWE president, joins us in the next hour, so that's going to be a fascinating insight. Ed Ludlow is standing by in terms of what else we've got in the pipeline of Bloomberg Technology. So I said it at 9 a.m., I'll say it again. We are holding on for the hero, Ed, that is technology.
Yeah, I think that the big theme for the earnings season is that the Magnificent Seven are still going to account for the large bulk of EPS growth for the S&P 500, for example. But this week, we kind of start in earnest. The chip sector is really important to watch. Texas Instruments is a maker of very basic chips that go into very many end markets, but they also are seeing shrinking bottom line because many customers have been working through a build-up in inventories. And then you look at Intel later in the week, the first time that they're due to report both revenue and profit growth in the post-pandemic era. But the thing they both have in common is the outlook for 2024. TSMC's capital spending plans for this year, they're the biggest contract manufacturer of chips, made us confident. And then go back to the Magnificent Seven. Tesla is first up this week, record quarterly sales expected. But again, look to the bottom line. That seems to be where we're going to be most focused, because they had to heavily discount and incentivize in the final 3 months of the year, with analysts expecting a drop in EPS, of about 39%. And Tesla has this target of 50% annual growth, which means that they should guide us towards 2.7 million EVs in 2024. The street thinks they'll guide to 2.2. But the broader story with EVs has been that we will still have growth in global sales this year, just not the growth we expected. And of course, being the market incumbent and the leading pure play in EV, Tesla is the best barometer of that. So buckle up, Manus. It's an exciting week. They let me out of my box, and I'll do my thing.
And you'll do it very well. Ed, thank you very much. Bloomberg Technologies, Ed Ludlow there. Calvin C. is with me, BNP Paribas, for his final thought. There is this view, buy strong tech with balance sheets. They earn money in a rising rate environment. Here we are going into a cutting rate environment. Will that embolden the growth to value narrative?
Thanks, Manus. A lot of the equity rally that we've seen over the last few months has in large part been because of the macro environment. And what I mean by that is we've seen a large rally in rates over the last few months. And that large rally in rates has meant essentially that these earnings in the equities market has been discounted back at a lower level. What's notable, though, is the driver of the rates rally. And the driver of the rates rally has largely been improving inflation. So inflation lower, rates lower, the equity markets love that. Going forward, however, we think that significantly lower rates from here, the driver is going to change. And with the markets already pricing the Fed to cut essentially at 25 basis points a meeting for the year, for rates to go lower, we need the markets to be pricing 50 basis points a meeting. And we think a necessary prerequisite for the markets to get there is that growth needs to weaken quite significantly. So the main message here is that lower rates from here, we don't think is necessarily going to be that equity market supportive, because the driver is likely to change.
Okay, let's see how the year pans out. It's still, it's still fresh in the year. Nobody really has that crystal ball. Calvin, thank you very much. Calvin C. On the markets right here on Bloomberg.
regional sports networks. There's a lot of, it's a business that seems to be collapsing. Leagues have sort of toyed around with, should we do something ourselves? Some teams are doing like local TV and streaming. How do you see that shaking out?
So I don't think I'm right on this, but my instincts keep telling me this is what's going to happen. Because if you remember the WWE, they launched their own network that had their own content and had their own pay-per-views. And it was kind of a smart, bold, ahead of its time. And then they pivoted at the perfect time and they sold their content to, what was it, Peacock.
Yeah.
And that was really smart too, because they were able to leverage that number as high as possible. So they always zagged where the money was and where the opportunity was. I think the opportunity for the NBA with the local teams would be to own all that themselves.
Mild bid for breadth this morning. Russell up 0.5%. 80% of the companies that have reported in America for the fourth quarter, they've beaten in terms of profits. That's the note hot off the UBS scribe from Salita Marcelli. Let me get you up to date with your trading diary. This is what you're going to watch for the rest of the week. Today, it is all about politics. New Hampshire primary plus Netflix. We've banged that drum several times. We'll get those numbers. Wednesday, it is more tech earnings, Tesla and IBM. What are the price cuts at Tesla? Thursday, it is macro monetary policy. ECB is on the block, and we will get a read on the growth story in the United States for the GDP. American Express hits the tape on Friday. Equity markets at the moment are bid. This is about banking on earnings from Netflix, from Tesla. Equity markets are bid up. That was Countdown to the Open. Thanks for joining us on Bloomberg.
Do you think there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well? Or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Paul Sweeney and Alex Steele with you here, Bloomberg Intelligence, for a Tuesday morning. We've kind of got a mixed tape out there. We'll get to that in just a moment. Coming up, we're going to check in with Brooke Sutherland. She's a Bloomberg opinion columnist. She covers the industrial companies. A lot of industrial companies reporting earnings today. Not so great. We'll check in with her. And then we'll speak with Natalie Trevithick. She's head of investment grade credit strategy at Payton and Rigo. Get her market call on the credit space here. And then we're going to touch base with Bloomberg Israel Bureau Chief Ethan Bronner. He's going to join us via Zoom from Israel, get the latest news coming out of Israel. So all that this first hour, lots happening. And let's kick it off here with a Bloomberg Business Flash.
All right, the major averages mixed in the early going. Earnings certainly in the driver's seat today. S&P 500, we have 7 of the 11 major industry groups in the index. They are actually higher. Communication services in the lead. That's where we're going to find shares of Verizon. It reported it's finally adding wireless subscribers. And the biggest drag right now, healthcare. That's where Johnson & Johnson resides. The CFO said pharma sales are going to be lower in the second half of the year. So, where do markets go from here? We put that question to Seema Shah at Principal Global Investors.
We are expecting this to be a fairly strong year for equity markets, but we also anticipate that the beginning of the year could be fairly volatile. Maybe certainly not seeing as strong equity market gains as a full year, but really spreading out to a number of other sectors, other styles as well. So I think it's going to look slightly different to what we saw in 2023, but overall still a positive year.
And right now the S&P 500, 3 points higher, 48.54 on the index. Keeps going higher. NASDAQ 100, 12 points higher. The Dow Jones Industrial Average, 71 points lower. That's at 37,931. And you can almost guess what the worst performing stock in the Dow Jones Industrial Average, 3M, down right now just about 10%. Nora's going to take a deeper dive into that. But we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live as well. So head over to YouTube and search Bloomberg Radio. And Alex, the story for me, wrestling. Netflix has acquired the exclusive rights to Raw, as well as other programming from World Wrestling Entertainment, marking the streaming service's first big move into live events. And what I learned in the previous 3 hours, one Lise Mateo may have a little bit of a crush on The Rock.
I mean, okay, number one, who doesn't? The Rock is awesome. Number two, but I genuinely don't.
By the way, he was able to copyright The Rock. So
yes.
That's exclusive to him.
As he should, because he's awesome.
Yep.
But what's interesting about this deal is that it basically doubles what the WWE is going to be getting from what it's already getting on cable. Like, this is serious money that's being thrown here, and I wonder what Netflix does. Do they raise their prices? What do they do?
Know. I mean, the TKO Group, which owns the wrestling stuff, up 20%. So how about that?
Yeah,
so it's a big move there in that. It's a $16 billion market cap company, go figure. But it's good for those folks right there. Let's bring in Norma Linda. She covers all the stocks, all the markets here. She joins us here in our Bloomberg Interactive Broker Studio. Norma, what are you looking at in the market today?
Well, D.R. Horton, that's a home builder. It reported its first earnings gain in 5 quarters in pre-market trading today, but that wasn't enough to wow investors, as the firm's increase was less than analysts had initially expected. Its volume of orders and backlog also missed consensus estimates as well. That stock is slumping as much as 7.7% for its worst day since November 2020. Barclays analyst Matthew Booley urges investors to use this weakness as a buying opportunity. And Ken Zenner, he's an analyst over at Seaport Research. He's known for correctly calling the sector's performance for the past 2 years, actually downgraded his view on the sector to neutral yesterday, citing return potential for the sector has diminished.
Yeah, and BI talking about how commentary, Drew Redding is awesome. He covers the home builders for Bloomberg Intelligence, and he's saying that it's really about the commentary that's key, because in theory, this is supposed to be a super great space because we need the supply, right? So
and the
it's all
stocks
gonna,
have done well.
Exactly. So it's all going to be about sort of that expectation management, which clearly didn't work so well for this quarter.
Right, and DHI does say that it sees some optimism heading into the spring selling season, and as you all know, home builders, that is their strongest season.
Yeah, I mean, I'm just looking at the mortgage rates, and we're still high. We've come off the highs.
Wait, are you going to refinance yet?
No, it's not. I'm not even remotely close because I have a 6% mortgage, so I need to. I'd love to.
Not bad,
it's not bad relative to historicals, but I mean,
it's me.
You.
I'm the awesome one.
You're the crazy one.
Oh
What
my
do you-
goodness. 2.75.
2.7.
Nice.
Jealous.
High five.
Giving you money.
3 1/4.
You won.
I mean, literally, I can put my money in like a 3-month T-bill and like easy pay my mortgage for like 6 months.
Everyone's jealous.
Yeah, we need to get a 4 handle before I call it my guy.
Well, speaking of something that's not doing well, the worst performing stock in the S&P is 3M. Walk us through why the pain is so much.
Yes, this is another spiraling stock for you today, Alex. One to keep an eye on. 3M forecasts 2024 profits and sales growth that were below Wall Street expectations as it continues to contend with sluggish consumer demand that's weighed on growth for the better part of a year. The cautious outlook was announced as 3M reported adjusting quarterly earnings well above Wall Street expectations, helped by a restructuring push to make the company more streamlined. Those shares are plunging as much as 9.9% for their biggest drop in almost 4 years and making it the biggest weight on the Dow Jones Industrial Average by percentage.
Yeesh.
I mean, I know we're going to talk to Brooke Sutherland a little bit. She covers all these industrial companies here, and also the GE results were a little disappointing too. So it's corporate America.
Yeah.
A little tough out there for them because we've seen PMIs, manufacturing PMIs, actually been negative for many months now in contraction. It's the consumer that's been holding up this economy, but the manufacturing part has definitely been struggling.
But that's why I think 3M is so interesting, because they do lots of stuff.
Yep.
Like they sell things to China. There's the retail spending, like my Post-its. There's industrial demand, and there's electronics. They do so much, and all of it doesn't work right now. And the whole point of a big conglomerate is that if one area stinks, then the other area can make up for it, and that's just not where 3M
Didn't
is.
we debunk that a long time ago?
This is the theory, man.
Yes.
I am just saying the words for the
I mean,
theory.
think about it. We'll talk to Brooke Sutherland about this, but just think about the last 20 years for GE, what it was and how it's trimmed down to now just going to be 2 businesses, 2 separate businesses.
Yeah.
I mean,
it is kind of amazing, isn't it?
And again, I was there when Jack Welch and John Tucker was there. John Welch built all this stuff up, and then he leaves, and then it's just been 20 years of slowly dismantling GE, and now you're left with a couple of businesses.
It is a moment.
Yeah,
it is definitely a moment.
So, and Karen Uberhart from Bloomberg Intelligence has been there through the whole thing. So
there you go.
Exactly.
Verizon, you're also looking at, though.
Yes, going to give you a bright spot here today. Verizon is jumping as much as 5.3% for its biggest one-day gain since October. It's one of the biggest gainers in the S&P 500. The company reported that it added the most mobile customers in 2 years. This really marks a turnaround for the company.
Yeah, this is a tough business, man. Everywhere you look, the mobile business, just for telephones, incredibly competitive. And you think about their commercial business, providing broadband to small and mid-sized and corporate businesses, also brutally competitive.
So where's the growth here? Is it just like not losing growth?
It's not, and that's why this is basically a utility. I think some of these things, there's just no real growth because it's everywhere you go is competitive. The cable companies are right there in your backyard for your broadband business, and now they're into the phone business. So it's just a very competitive business, and it comes down to just managing your capital structure and being efficient with your cash.
You know who likes Verizon?
Who likes Verizon?
Bill Gross.
Bill Gross?
He likes Verizon because he's basically just wanting to clip all the dividends.
You interviewed Bill Gross yesterday.
I did, and he specifically mentioned Verizon.
Did he really?
Yeah.
You don't hear that very often.
Exactly. Like not sexy stock, like not a lot of growth, but it's all about that dividend payout. So
all right,
there's
Nora,
that.
Thanks so much for joining us. Norma Linda, she covers all the equities for us. Let's check in with Brooke Sutherland. Why? Well, she's very nice. We like talking to Brooke, and she's super duper smart, and she really covers all of these industrial companies well. And there's a lot of stuff to talk about here. So Brooke Sutherland, she writes for Bloomberg Opinion. She's based up in Boston. Hey, Brooke, I don't know where you want to go here. We've got the 3M issue. We got the GE earnings. Let's start with those companies, which are, right in your bailiwick in terms of industrial America. What do we take away here?
Sure. I mean, I think there are two different stories here. So, I mean, GE sits primarily, its crown jewel is the aerospace business, which will stand alone come April once it completes sort of that final piece of its slow-moving breakup. This is a very strong corner of the industrial market, particularly for companies like GE that provide maintenance services, repairs. That business has been booming because we've had so many issues with Boeing and Airbus in terms of being able to deliver jets. So it's kept airlines flying older planes for longer. Older planes need more shop visits. They need more repairs. And so companies like GE have just been really growing like crazy there. And that looks set to continue given Boeing's continued challenges and then also the recall of the geared turbofan jet engines, which is impacting a big portion of the Airbus A320 fleet. And so that business is really doing quite well. And I think GE is just kind of chugging along here. I think the stock reaction that you're seeing reflects the fact that this company, the shares have really just taken off like a rocket ship over the past 12 months on enthusiasm about this breakup. And maybe, investors got a little bit ahead of themselves in terms of the forecast. But this is also a company that has a history of setting the bar at a beatable level under Larry Culp. At 3M, it's a completely different story. They play more in sort of the shorter cycle industrial markets, places with quick sales turnarounds. And so they've really been hit hard by slowdowns in electronics and in China as well. And, that sort of general inventory destocking phenomenon that's haunted much of the industrial sector over the course of the back half of 2023. And I think, as you look at the forecast that they gave for this year, there's nothing heroic here. We're talking about pretty pedestrian sales growth going forward. And I think, there was some hope that maybe we might start to see some green shoots, that, this corner of the industrial world might start to turn around if for no other reason than, the ISM has been in contraction territory for 14 months now, which is the longest streak since the dot-com bubble burst. And at some point that has to end, but it doesn't appear that we've reached that point just yet.
Talking about 3M before and just talking about, hey, wasn't this the whole point of a conglomerate, that like you have all these different parts, you have industrial demand, you have retail demand, you have China demand, you have electronics demand, and then that's going to spare you all the pain, but it seems like everything is not doing well.
3M always makes the argument that their businesses stick together because of material science. When you think about, they sell automotive adhesives and then also Post-its, but at the end of the day, it's still an adhesive, and there's a lot of overlap there. But where that is really breaking down is that they were supposed to have this, superhuman R&D engine that would just keep churning out better and better products and help push the growth of the company along, and we're just not seeing that in the results. And the company has been in restructuring mode for years now, quite frankly, and then also dealing with the very serious legal liabilities related to PFAS and military earplugs. And so it's a company that is trying really hard to reinvent itself and get back to focusing on actually making industrial products, but that's just not the story right now.
I mean, is he taking a victory lap here? Because he's really done a good job, it seems like, just looking at the stock.
Yeah, I mean, he should be. This was certainly not an easy task that he inherited. It was some pretty dark days when he took over as CEO of GE. And I think there are a lot of lessons here from what he's been able to do as we think about what Boeing needs to do to right the ship over there. There was a lot of shared executives between those two companies, and I think some similarities between their two cultures, and GE has done sort of a really top to bottom overhaul of the way that it operates, and that extends not just to the boardroom but to the factory floor. And Larry Culp's been very hands-on, and he's a big believer in lean manufacturing, and that is a philosophy that is rooted first and foremost in safety and quality and on-time deliveries, which are things that Boeing really could use some lessons on.
Yeah, said so nicely, because it's brilliant. So I'm looking through the different areas. We talked a lot about aerospace. For GE, I'm going to be interested in the energy part, and that's what really the spinoff is going to be. I have to say, though, not terrible. Like the renewable energy revenue up 23%, power revenue up 15%. There was still an operating loss, though, in renewable energy. Where's the weakest link there?
Yeah, no, it's definitely not terrible. And this business has come a really long way. And, I think it's gotten to the point where it is at least stable, and that it's realistic to have a conversation about what this looks like on its own, which was certainly not the case for a very long time. They're still struggling a bit in offshore, but they, have been able to eke out some profits in onshore and in grid, which is really, helping to put this business in a much stronger place. So they're not out of the woods completely just yet, but they've really come a long way. And to be talking about positive free cash flow, I mean, that blows my mind a little bit as I remember the dark old days when we were coming out of the disastrous Alstom acquisition, and this business was just on the gas turbine side was just bleeding money, and so this has really been a stark turnaround, and the business is in a much better position, especially when you think about Siemens Energy, which is probably the closest peer, and just all of the issues that they have had, which also stems from quality control. And I do not think it is a coincidence that GE under Larry Culp, with all of his focus on lean manufacturing, has avoided the major quality control lapses that we've seen at Siemens Energy, at RTX, at Boeing. I think the company is just a lot more on top of it, and that's a reflection of his approach.
So it's wind. So it's all about energy. It's the big wind turbines.
Yeah.
Often somewhere off of New Jersey, I think they were
so.
supposed to be,
I think so.
and then Ørsted didn't like that
Well,
so much.
Oh, that's the proposal. I believe it's gone through. They're still doing, I think, environmental impacts.
No, but the companies, they want more money because prices have gone up so much, and the contract isn't giving them the money, and so they're kind of pulling out and writing down their stuff.
Seeing those big turbines off my deck.
We got bigger issues in New Jersey. Hey, Brooke, let's switch gears a little bit about Boeing. I'm seeing that recently the United Airlines chief executive Scott Kirby criticized Boeing on Tuesday, saying he was disappointed with what he called the plane maker's sluggish response to the grounding of MAX 9 aircraft. What's the latest from our good friends at Boeing?
The latest is that MAX 9 variant that was involved in the Alaska Airlines incident remains on the ground, and the FAA is being very thorough. They did complete sort of the first round of inspections on those 40 initial jets, and we're downloading that data to see if that process was what it needed to be to get those jets back up into the air. But I think the frustration among Boeing customers is palpable, not just from United, but we've also heard comments from Ryanair and a couple other customers, because this is just not the first time that we've had manufacturing issues out of Boeing, nor is it the first time that deliveries have been delayed, or a plane that Boeing had promised on a certain timeline gets significantly delayed. And I think if you're an airline customer, you just have to be frustrated, and I think that's just what we're seeing right now.
Yeah, it really is amazing. And the question is, where do you go? And it's a duopoly here, so I'm not sure where you go.
Exactly.
So, all right, Brooke, thanks so much for joining us. Brooke Sutherland, and she's a Bloomberg Opinion columnist. She covers all the industrial parts of this economy, so it's great to check in with Brooke on a day when you've got 3M reporting, you've got GE reporting. United actually had some good numbers. That stock is higher. There's still some issues ongoing with Boeing. And I read a piece, recently, opinion piece, where it just kind of said, Boeing, they made a decision maybe a good decade plus to focus a little bit more on profitability, total returns, maybe at the expense of some of their engineering investments.
Well, and also squeezing suppliers at the same time, so asking Spirit to go faster and harder and take less profits, and that's going to have ramifications too at the end of the day. So I don't know how you dig yourself out of that hole in a timely manner.
No, and so unfortunately the net result is they've had these big issues to deal with here, as have those shareholders. Well, more coming up. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they're mixed right now. The S&P 500 adding to its record close. Slew of earnings today. That's in the driver's seat. And it's kind of instructed to look at the Dow Jones Industrial Average. So the best performing members, Verizon and Procter & Gamble. The worst performing members of the Dow, 3M and Johnson & Johnson. U.S.-listed Chinese shares gaining after Bloomberg reported Beijing considering a package of measures to stabilize their falling stock market. And then you have Bitcoin. It's fallen over 20% since the January 11th launch of the ETFs. Investing directly in the token, speculators, they become more cautious about the potential impact of those products. S&P 500, 5 points higher, 48.55 in the index. The Dow, 47 points lower, 37,954. And the NASDAQ 100 right now just 6 points lower. Let's take a look at Treasuries. The 2-year right now up 1 basis point, 440. The 10-year up 3 basis points, and that's at 413. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. In just moments, we're going to bring you a simulcast interview. Ed Ludlow, Katie Greifeld, they're chatting with the president of WWE. WWE's own, they're doing that deal with Netflix. Big deal for them and for the wrestling business, which John Tucker supposedly, I guess, is not a fan of.
He's not a fan.
He's a book reader. He just chided me for watching the movie Oppenheimer and not reading the book.
Emblematic of the decline of Western civilization. So
Cool.
No big
so
deal.
There's that. And also, a lot of people do like watching this.
And then there's the Wall Street take, which is the only take I care about. TKO Group Holdings, which owns WWE, stock is up 18% today. This company's got a market cap of like $15, $16 billion. I didn't know it was so big.
Yeah.
Holy
so
cow.
Let me ask you, ex-media investment banker, Wall Streeter guy, what happens to the cable networks that are now losing this? Like, yes, they don't have to pay $250 million a year, but...
No. So the cable TV business, because of cord cutting, is in a very bad spot. And that is why the big media stocks have been generally underperforming significantly over the last several years, because investors are asking the same question you're asking. It's like, hey, they used to make a lot of money when every household in America paid a cable bill or a satellite TV bill every month. Now only about half of the households do it. It's amazing, just in the last 7 or 8 years. So that revenue that was going to the cable network owners is just not there to the same degree.
But will those people, though, pay? Okay, so you have like Amazon Prime, you have Netflix, you have Peacock. Like, they all have different sports and they're paying different stuff. Are people like me going to pay an extra $1 or $2 or something for all of them?
On every service? Remains to be seen. That remains to be seen. You are, if you look at your Visa bill, seeing lots of other charges for your Netflix and your Peacock and your this and your that.
That's interesting.
You add it all up, boy, it looks just like your cable bill looked 4 or 5 years ago. Same dollar amount, same thing, and it's just. But anyway, but the economics have been changed, and so anywho, if you're Netflix, the big thing for Netflix is they said for the longest time we don't have any interest in sports. We don't have interest in live events. Not that I'm calling wrestling a sport, Mr. Tucker. I'm just saying live events, sports, and sports-like content.
Don't call it fake because you'll get beat up.
I know I will. But so this is really the big first foray into live program. That's why it's important for Netflix.
But interesting is that they have done a lot of docs when it comes to sports, right? Like the David Beckham thing. Or something else that I'm forgetting because it's sports related. But like those have done really well. So I wonder if there's going to be like a doc on WWE or something along those lines, and like that's how they're going to broaden it out to a different audience.
Well, a lot of people have said, "Why don't you bid for football or stuff like that?" And I don't think they want to get involved in that craziness, the costs associated with sports. That's always been their response: is it's just too expensive.
But
and
WWE is a good story.
Yeah, the WWE is a good story, and you can build a lot around that in terms of programming. And the people at Netflix, they know how to do that, so they're very good at the programming thing. So it's pretty cool. It's a big deal. TKO Group Holdings, that's the stock. TKO is the ticker, and it's up a good 18.5% on the news that Netflix is going to be broadcasting their stuff. Right now, WWE President Nick Khan, he speaks with Bloomberg's Katie Greifeld and Ed Ludlow on the Netflix Raw deal, which has been such a big deal for both Netflix and for TKO Holdings. Let's take a listen right now.
We welcome now our TV audience and our radio listeners for more on Netflix's deal to acquire exclusive rights to Raw and other programming from WWE. I'm pleased to say we're joined now by WWE President Nick Khan, and still with us is Bloomberg Technology co-host Ed Ludlow. Ed, take it away.
Yeah, Nick, welcome to the program, and thank you for your time. This is interesting. I don't think anyone saw this coming, really. Let's start with this cultural and audience question, right? Because the deal focuses on Raw. The value of the deal, we're reporting $5 billion over 10 years. But there might be an audience out there that's like the most loyal SmackDown fan that says, hey, I'd love to be watching WWE SmackDown on streaming platforms as well.
Sure, understood. Look, we're pleased with the deal, and we love the fact that Netflix was willing to take a bet on us. As we know, they had said previously that they were not into sports rights. The good thing about WWE, it's sports entertainment, as you said before the quick break there. So we're an entertainment property as much as we are a sports property. 52 weeks a year live, consistent programming, an audience that is actually quite global. If you look at India, and India is not part of this deal, but if you look at India, we're the second most popular sport in India. If you look at the United Kingdom, we're the fourth most popular sport there. This deal will take effect in the UK. So in addition to the United States, it allows us to gain even a greater global footprint as we look to expand the business.
Well, Nick, I want to talk a little bit more about the decision to go with Netflix, go with a streamer versus staying with a Comcast, for example. Did this purely come down to numbers where you were going to get the better deal, or is this, in effect, a bet on where the future eyeballs are going to be?
Well, look, we continue to love NBCU. We have SmackDown on USA premiering this October there. We have our premium live events, formerly our pay-per-views, like WrestleMania on Peacock exclusively in the United States. They've been tremendous. For us with Raw, it was yet another test of someone new in the space, obviously an established streaming entity, the streaming entity, if you will. It was a good bet by us, and we think a good bet by them.
Nick, there's kind of two sides to it, right, from 2025. The regularity of a by appointment tuning into Raw, and then there are the pay-per-view events and specials throughout the year. Historically, if you think about Showtime, the distributor got 30% from a revenue split perspective. My understanding is that if you're a Netflix user, there's no additional cost for WrestleMania or those set-piece events. Are you able to clarify that if you're not a Netflix subscriber, you do just pay a normal pay-per-view charge? And how will you and Netflix split those revenues globally? Because a lot of this is ex-US, right? It's an international deal.
Correct. You're 100% correct. There is no upcharge for WrestleMania or the other premium live events anywhere in the globe where it's on Netflix. No upcharge. The 30% you talk about, the traditional pay-per-view model, WWE was the first mover to get out of that space in 2014 when we started WWE Network, which brought WWE direct to consumer on our own OTT platform. From there, 2 or 3 years ago, we licensed that content to Peacock. That was when the streaming wars began. What we realized was a company of our size, as great as we'd like to believe we are, we're not going to compete technologically with the Amazons of the world, with the Netflixes of the world, with the NBCUs of the world. So it made sense to start it in 2014 to get rid of that excessive charge that in-demand, Dish, Direct were charging for pay-per-views, and to bring the cost down for our consumer. We think Netflix furthers that.
Let's talk about ad pricing a little bit more here. Does this give you greater ad pricing power, this deal?
We think so. Look, you've seen what Amazon's been able to do on their ad-supported tier. Netflix is going to have great success in that space. WWE, again, 3 hours a week on Raw every week allows Netflix to monetize this deal in the advertising space in a way that has not been seen before.
Hey, Nick, Raw has this kind of super loyal and sizable audience, but there must be a part of this deal where you're like, okay, we need to think about the future and growing a new audience. And I wondered if there's any terms in the deal when Netflix goes away and produces a behind-the-scenes kind of documentary exclusive to Netflix that introduces WWE to that new audience. Think about, like, what am I thinking of? Drive to Survive and Formula One and the success that that had, bringing a sport to a new audience.
It would be a mistake by us at WWE to not do that with Netflix. So assume that what you said is exactly what we're all thinking, we being Netflix and WWE. You saw what Drive to Survive did for Formula One, as you just mentioned. We think the WWE audience, already big on a global level, only gets bigger with a show like that.
So potentially a lot to look forward to. So it sounds like WWE and Netflix are going to work on things outside of Raw here, that it's not just about this one program.
Keep in mind, at WWE, we have a whole treasure trove of intellectual property that is largely untouched. So if you look at what Disney has done, certainly that was through acquisition, with Marvel, with Lucasfilm. If you look what Warner Brothers Discovery did when they acquired DC a long time ago, you now have this treasure trove at Netflix that's available to produce. So things like The Undertaker, characters that have been created over time, we're looking forward to getting to all of that with Netflix as well.
Nick, a really fantastic question that our producer Joe Choffey has is about tech and infrastructure. This deal doesn't kick in until Jan 2025. Is that because Netflix needs time to know they can support a live stream of that scale weekly?
No, not at all. It just timed out budget-wise to start in January. But I'll tell you this, WWE, with the WWE Network that I referenced from 2014, we're turnkey programming. So number one, Netflix knows how to distribute it and make sure that it goes around the world live. It's not going to be any issue. We also know how to do it. So the partnership, even on that level, we think it's going to be a great thing.
Nick, 10 seconds. How many new eyeballs will you get in 2025 that you don't have already through this deal?
Well, look, against the college football playoff, the two semifinals game on a Monday night a couple weeks ago, you're talking about Michigan, Alabama in the game. We did a 0.6 in the demo with millions in the overall rating, again, against stiff competition. So we think with the Netflix reach, it's millions and millions around the globe. We're excited about the whole thing.
All right, our big thanks to Nick Khan, WWE president, and of course, Bloomberg Technology co-host, Ed Ludlow.
All right, some good stuff there. WWE President Nick Khan speaking with Bloomberg's Katie Greifeld and Ed Ludlow on Netflix acquisition of exclusive rights to Raw and other programming from WWE. $5 billion over 10 years, a big, big deal. TKO Group Holdings, the company that owns WWE, that stock is up 18% today, so the street likes that news. Right now, let's head down to Washington, D.C. We will get world and national news with Amy Marshall.
All right, thank you, Paul. Israel has taken its first worst single-day loss since its all-out assault on Hamas began in Gaza after the October 7th attack. 24 soldiers have been killed in an attack in central Gaza. Bloomberg's news director for Europe, the Middle East, and Africa, Rosalind Matheson, says the timing of this incident is critical.
It comes at a time when the support levels inside Israel for the conflict with Hamas in Gaza seem to be rising. There's a hardening of views inside Israel that despite international concern that Israel itself faces this existential threat from Hamas going forward and possibly also from Hezbollah.
Bloomberg's Roz Matheson says supporters are firmly behind the ultimate goal of wiping out Hamas. It is primary day in New Hampshire. Bloomberg's Laura Davison is there as part of our political team covering today's primary. She says the polls in New Hampshire can be somewhat inaccurate.
New Hampshire is different in how it votes from many places, and that you have a large number of what they call undeclared voters. These are, essentially independents and neither Republicans nor Democrats, so they can go in on primary day and request the ballot of either party.
Bloomberg's Laura Davison in New Hampshire. Tune in to our New Hampshire primary special tonight at 8 p.m. Wall Street time. Hear and watch it all live on Bloomberg Radio and television. Democrats in New Hampshire are calling on officials to investigate some suspicious robocalls. The New Hampshire Attorney General's office says it's investigating reports of an apparent robocall that used artificial intelligence to mimic President Biden, advising people in the state not to vote in the primary. The White House says the call was not recorded by the president. Mr. Biden, Vice President Harris are set to hold a rally together in Virginia. They'll be discussing abortion access. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg. Here's John Tucker now with a Bloomberg Business Flash.
All right, thanks, Amy. With the major stock averages, they're mixed right now. Corporate earnings reports, they are in focus today. By and large, we've seen 2024 estimates kind of hold up. United Airlines jumping on better than expected earnings, leading airline stocks higher. And then Verizon advancing today after the telecom giant's guidance impressed analysts. That's the best performer in the Dow Jones Industrial Average right now. Meantime, with the Fed meeting not far off, Priya Misra at JP Morgan Investment sees rate cuts on the horizon, but she's not sure that the timing of all this really matters.
If you're trading the 2-year or the 10-year or equities or any asset class, what matters is the end point. How much are they cutting for what is the reason that they're cutting? Are they trying to normalize? Are they actually trying to ease policy?
And then you have General Electric slipping after the firm's Aero outlook. That disappointed analysts. 3M slumping. The manufacturer forecasting profits and sales growth for this year that trailed analysts' expectations. 3M is down right now $11. That is down just over 10.5% at this point. S&P 500 unchanged now, 4850 on the index. The Dow 113 points lower. The NASDAQ 100 is up 6 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube. John, that's the internet. So you can go over to youtube.com and search.
I know what that is.
Oh, okay, good.
It's not
good.
just reading books.
Interweb, that's right, exactly. So we're here. All right, I'm looking at the IN-GO function. That's a Bloomberg Index browser, looking at the fixed income space. Negative returns here across fixed income here. Last year, thanks to the rally at the end of the year, fixed income folks actually had some positive total returns there. Good year, because 2022 is just ugly here. So it's been tough space in fixed income. Let's get the latest outlook here. We can do that with Natalie Trevithick, head of investment grade credit strategy at Payden and Regal. So Natalie, you guys rallied. I'm going to say you guys being the fixed income folks kind of rallied there in November, December, got some positive returns. How are you approaching 2024?
Yeah, that was a sharp rally, and maybe it went a little bit too far, bringing forward some of 2024 returns. But despite the modestly negative returns year to date, investor appetite for corporate bonds is insatiable. We've already had over 150 billion of supply this year, and most deals are over 5 times subscribed. So there's just so much investor money trying to get invested in corporate bonds at these higher yields, despite the small rise in interest rates since the beginning of the year.
So then what happens when the Fed actually cuts?
Yeah, if the Fed cuts, that's just even better news for corporate bonds, since we think, there may be some potential widening in spreads, but that'd be offset by the move lower in interest rates. And even though the market's still pricing in a number of cuts this year, 5 to 6, we think they may come a little bit later than anticipated, maybe in the second half, because the economy is still looking strong.
So, what's the market like? Are you just, like when the phone, Morgan Stanley, Goldman Sachs, or whatever, calls you guys to buy a new issue, do you just buy it? Are people just buying these things, or are they saying, "Oh no, this is the maturity I want. This is the sector I want," or are they just kind of clamoring to get anything?
They're clamoring to get most things. There's been a ton of bank issuance, and people were afraid to touch banks for a while last year. They rallied sharply, and people can't get enough of them. We've had some of the big banks price $5 billion deals, and there's 20 billion of demand for them. So people are going after that, but they also want duration. So we haven't seen a lot of 30-year issuance, and whenever there's a 30-year deal, people just want to lock in these higher yields for longer, whereas issuers, they rather borrow in the front end and not have these long-term high interest costs.
So if I'm a banker, I'm telling my issuers, we can go super covenant light, covey light, as we used to say back in the day. What is that? Are you guys are the buyers just so aggressive that they will maybe give on some covenants and things like that?
Yeah, it's getting to be that way in the high yield market. We're seeing less covenants. Generally in investment grade corporate bonds, we don't have many to begin with. So we're used
right.
to playing that game, but they are pushing spreads, to the brink.
Well, I have to be honest, guys. I'm normally risk averse anyway, but this makes me nervous. You have covenants sort of going by the wayside, massive issuance, still massive demand. From what you're saying, it seems a little bit indiscriminate. What's the risk potential here then?
Yeah, the risk would really be if we had a downturn in the economy, then banks would underperform. They're very much a beta for the market. But we do expect some volatility. We think spreads have come a long way. They ended last year 30 basis points tighter, and they're tighter even this year, despite those negative yields. So we think there could be some near-term volatility, and you see those negative returns over the short term. But with a 5.25%, average coupon on a new investment-grade credit, we think over the longer term you're going to clip that nice coupon and maybe get a little bonus if the Fed cuts. So we're looking at mid to high single-digit returns in investment-grade corporate this year.
Wow.
So are there sectors that you guys prefer these days in the credit space?
Yeah, we've actually started to like the REIT sector now that interest rates are off the high. We think that has room to perform, and there's still a strong labor market. You know, we like some of the residential REITs, maybe staying away from some of the office REITs. We continue to be selective in the energy sector. There's been some attractive deals coming in that market, particularly within high yield, which we find compelling. And then banks are being pretty selective. We're looking for some of the banks which are coming at a little bit of a concession, but those have been pretty aggressively now. So it's really deal specific there.
Natalie, I'm also wondering, when you mentioned that, like, if we see a downturn, that would provide some rough volatility for the sector. What kind of downturn? Like softness versus like a deep recession? Like what happens if we just kind of have middling growth, for example?
Yeah, we're expecting that soft landing and maybe some middling growth, and that's almost a Goldilocks scenario for corporate bonds, since there's no real reason for them to widen, and you still have investors looking for that extra 100 basis points by going into corporate bonds over just treasuries. So you kind of hang out there and you get that coupon clipping year. You know, obviously, if it's a harder recession and it's unexpected, you could see spreads, you know, blow out materially wider. But what we've seen is investors tend to step in when we got that volatility last year after the banking crisis. When spreads got to 165, there's a strong buyer base came back in and pulled spreads back in as we recovered.
So when you talk to issuers here, are they raising money because they can, because they have to, because, boy, they could have raised money a lot cheaper a couple of years ago. And why are companies coming to the market here, given that rates relative to the last several years are in fact higher?
Yeah, so corporate bonds these companies tend to issue, you know, once a year, some of them multiple times a year, like the banks almost come every quarter. So it's just refinancing their existing debt is a lot of it, general corporate purposes. Some of it's for share buybacks, but you kind of hit the nail on the head is that they refinanced a lot of their debt a few years ago, particularly in 30-year bonds. So they have a lot of duration out there already that they have at very low coupon payments. So now they're looking more at the front end and just continuing their normal boring schedule. It's actually interesting that the average coupon has only gone up about 50 basis points from the lows it hit last year. So it's only about 4.25% now. So it's not like they're refunding their entire debt stock each year.
So any kind of like massive wall of maturity that we've been worried about over the last 2 years that will come due and rates aren't going to be from the Fed at zero, that's not a thing.
That's really not a thing in investment grade bonds because, as I mentioned, companies have termed out their debt, issuing 20, 30, 40-year bonds. So there's no looming wall there. And high yield companies have had great access to the market. Supply's been a little bit light there. And there's a lot of private debt financing in that market. So we really don't see a big maturity wall looming in the next few years.
Natalie, do you guys at Payden & Regal, do you stay domestic U.S. or will you look at international issuers?
We'll look at international issuers as well. We have a great emerging markets team here.
And so what's kind of the view for you guys for emerging markets and just, you know, paper outside the U.S.?
Yeah, we think there's definitely opportunities in emerging markets. I'm going to defer to their team to give you the countries, but we think it could be a solid growth year for EM.
All right, Natalie, thanks so much for joining us. Really appreciate it. Natalie Trevithick, Head of Investment Grade Credit Strategies, Payden & Regal here. So, all right, Alex, just get me up to speed here on the Oscar stuff. I mean, now you saw Barbie.
Oh, okay.
So
I mean, how much time do I have on this?
Yes. And so, is this going to get recognized by the Academy, as they say?
Okay. Here's my feminist flag that's going to wave for a second, okay? I'm a huge Barbie fan, okay? So just save your critique for that. But the fact that Margot Robbie and the director of Barbie were not nominated for the Oscar feels to me, A, the point of the movie, and also just plain old wrong.
You're saying Barbie is an Oscar caliber
Have
film?
you seen it?
I wouldn't see that if you couldn't pay me enough.
Well, then how
that.
can you possibly? I've seen Oppenheimer and I've seen Barbie. So I am the only one on this table qualified to talk.
So give me tie in the apparent snub, if you will, of Margot Robbie and the director. Is it a woman?
Yep.
And they were not nominated, yet Ken, played by Ryan Gosling, was nominated.
Yeah, first off.
And that raises some flags. And put that in the context of the movie itself.
Okay, my friends, if you have not seen the Barbie movie, it is all about women power and sort of being eroded in the real world, and then Ken finds his power, and then he beefs up and kicks Barbie out of Barbie Land, and it becomes a whole thing. So to me, just the fact that only Ryan Gosling was nominated, which he should have been, he was awesome, he was fantastic, and he shouldn't have been nominated, feels very much like the point of the movie. Like, here are these two women. I mean, Margot Robbie bought the rights to this in 2018, like right when before the Me Too movement really took off. Like, she has owned this.
Margot Robbie?
Yes,
is that right?
She produced it.
Wow.
She's owned this thing, and then to get that snub, I don't know. It feels hurtful. It feels hurtful.
I'm sure there's a Barbie blog running somewhere. This has got to be just flying all over the social media.
Oh, I don't know. I'm just on my soapbox, man. I don't know anyone else, but it's my soapbox, and
You're
that's what
saying
I'm
this
sticking
is a
to.
film that's, say, on the same caliber as Paul Scofield in A Man for All Seasons.
They're
just
different
to
movies,
pick one,
but they're different movies.
One film from
like,
the past.
you also can't compare, say, Oppenheimer and Barbie. They're very different movies with different messages. Doesn't mean that one is better than worse.
When a film wins an Oscar, it's of a certain caliber. It's like, top tier
that brings
film.
back the question.
Is it, though? Please.
Well,
is
for
it
Best Picture?
Is
what
it?
are you saying?
Come on. Like, do we really think, I mean, I'm also a Lord of the Rings fan and total nerd, but do we really think Return of the King was like a super amazing quality caliber movie?
No, I just think our standards have declined.
Well, that's another issue.
I think John and I are gonna
one
have
of the issues
problems
coming
on
out
this
of that one of the issues in Hollywood has been, don't the people decide what's a great movie? And so if the box office for Star Wars is $1 gajillion, shouldn't that be considered?
Yeah, it's called people's choice.
Right. That's not how the Academy works.
No.
Obviously, it's like 3 people in a room, the farm, whatever it is, and they decide what's
And it's all
quality.
politics, right?
Yep, it's all politics.
It's all about press and sort of doing your thing and all that kind of stuff.
Yeah, all with the backdrop of, are people going to go to movies anymore? Are people going to pay for them anymore? Is it going to still be as good a business as it was before? That's kind of the backdrop here for the industry.
Well, let's get John Tucker's take. When was the last time you went to a movie, and what was it?
What
caliber of film will draw you in?
I actually don't remember. I do have a collection at home, and yeah, I could give you my top 10.
VHS?
But
I was going to say VHS
Yeah.
tapes.
No, they're Blu-ray disc
Oh,
or
look at you.
whatever. So I'm kind of
edge.
advanced.
But it's, I tell you, it's still big business for Hollywood here, and it's still, I mean, people are asking me, the studios still care big time because it's just kind of bragging rights for the studio. And
the last one I saw was The Joker, which actually was a character study, which was actually wonderfully
a well-done
acted.
movie.
So.
And Heath Ledger absolutely should have won for that. Yes.
Yeah.
I agree with you.
Okay.
But Barbie.
And also Barbie should also be nominated in more categories.
Okay, that's where we differ.
Exactly.
But you need to see it. You cannot
Yeah, that's
complain
right.
unless you haven't seen it.
You can't opine. That's right.
You see, okay.
S&P 500 unchanged on the day. Let's get back to the business at hand. Nothing happening. And for Lisa Bromwitz, I'm going to call that unched out there. The Dow Jones off about 0.4%. NASDAQ up about 0.1%. Yields a little bit higher here. 10-year Treasury, 4.14% on your 10-year. Looking at the commodities, oil pretty much unchanged here. It's had a little bit of strength here over the last 4, 5, 6 days. Brent crude had reached 80 earlier in the day. We're at 79.81, pretty much unchanged here. Gold a little bit higher, about 0.2%. Bitcoin, I don't call this. I got to talk to Mike McGlone of Bloomberg Intelligence. I don't know what's going on. It's off another 1.5%, 39,200. I thought it was supposed to go up with all these spot Bitcoin ETFs. What do I know? This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker, the newsroom, with a look at some of the companies we're following today. 3M, the worst performing stock in the Dow Jones Industrial Average right now. The maker of Post-it notes, among other things, posting earnings, forecast 2024 profit and sales growth falling short of estimates. Now, 3M began slashing thousands of jobs, you'll recall, as part of the restructuring push, the biggest restructuring push in their history that helped lift profit margins and cash generation. That happened in the second half of last year. Yet, they say, broader economic environment that still remains muted, as they put it. And New Brunswick, New Jersey-based Johnson & Johnson opening its books this morning. Fourth quarter earnings beating analyst estimates. Sales in the drug and medical device units both exceeding analyst expectations. But the shares, they took a dive after the CFO said pharma sales are going to be lower in the second half of the year on declining sales of their psoriasis drug, Stelara. And Verizon stock, that's getting a pop today. They added the most mobile phone customers in 2 years. This is a turnaround story. Verizon's consumer group adding 318,000 mobile subscribers. And yes, more evidence today of the decline of Western civilization. Netflix acquiring the exclusive rights to Raw, as well as other programming from World Wrestling Entertainment, marking the streaming service's first big move into live events. And finally, research from Gallup, putting a price on workplace unhappiness. No unhappy people here, though. They say disgruntled employees cost U.S. companies an estimated $1.9 trillion in lost productivity last year. 1/3 of respondents in this survey said they are engaged at their jobs. Only 1/3 are engaged. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, quick check of these markets. S&P unchanged, Dow off about 0.4%, NASDAQ unchanged. So from the index level, not a lot going on here. I am going to call out Bitcoin off 1.7%, 39,000 for Bitcoin, so below that $40,000 level, which had been key. 10-year treasuries, 4.14%. So that's a quick little snapshot of what's happening out there in the markets. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Sweden is edging closer to joining NATO. Turkey planning to vote to approve Sweden's membership later today. We're watching that. Chaos in the Red Sea starting to bite into companies' profits and your wallet. We get more from Bloomberg's Steve Potus.
The Red Sea crisis is roiling shipments of everything from cars to energy. Several firms are already warning of the impact. Electric vehicle maker Tesla plans a 2-week production halt at a German plant due to shipment delays, while Sweden's Volvo car has announced a 3-day stoppage at one of its factories. Retailers Tesco, Marks & Spencer, and Next have all flagged the risk of higher prices for consumers. All that's because at least 2,300 ships are taking lengthy detours to avoid Houthi militants' attacks in the Red Sea, a waterway that normally handles over 12% of global sea trade. Steve Potus, Bloomberg Radio.
One of Boeing's biggest customers has lost confidence in the plane maker's ability to overcome the quality lapses that climaxed this month with a mid-air emergency on an Alaska Airlines flight. United Airlines Chief Executive Officer Scott Kirby has also spoken with Transportation Secretary Pete Buttigieg over the grounding, which is now heading into its 3rd week. The Dana-Farber Cancer Institute, a leading Harvard Medical School-affiliated teaching center, seeking retractions of 6 studies and corrections on another 31 papers amid allegations that some of its senior researchers falsified data. Oppenheimer, the leading nominee from the Academy Awards, 13 nominations now. Barbie was the summer's biggest box office hit, but it was nominated for only 8 awards, including Best Picture. Killers of the Flower Moon got 10 nominations. Poor Things got 11. And get this, the Associated Press got a nod for the first time ever for 20 Days in Mariupol, which got a Best Documentary nomination. The Oscars will be held March 10th in L.A. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
Amy Mars, thank you so much. We appreciate it. China. You know, you look at it, and it's almost, I kind of feel like, uninvestable given the China risk of the government can come in like they did with the tech sector, Alibaba and so on and so forth, and really put the kibosh on your business plan. But they're trying to restart this economy.
Yeah, but is it going to work? So basically the news overnight was that China's considering a 2 trillion yuan, that's about $278 billion package to stabilize the stock market because it's just completely tanked in the last few weeks. They'd basically buy it through onshore purchases through Hong Kong. The whole point is to stabilize the yuan enough to bring in foreign investment. Is $278 billion worth foreign investment into a country that feels very, very risky with growth at a 5 handle, but in the reality could look a lot different? I don't know.
Yeah, I don't know. And it's interesting, the timing of this story for China, because at the micro level, Jack Ma and Joe Tsai, co-founders of Alibaba, just reported here today about Bloomberg News, they have bought $200 million of stock in Alibaba, and that stock is trading up 6% higher. So there's two individuals that were, and I know Joe Tsai personally very well, those are 200 individuals that were just the epitome of the success of the Chinese technology economy. Alibaba and Tencent and all those other companies that were just such huge companies, owned by institutional investors around the world. And then the government came in and basically just, put a set of restrictions on that industry, the technology industry writ large, that just destroyed so much shareholder value that I've spoken to a lot of institutional investors who are core shareholders of some of those Chinese tech companies. They're like, I'm done. There's not a scenario where I go back into China. And I think that's true for a lot of investors, and that's really a challenge.
No matter if the government buys up a lot of stocks.
No. Yeah. I mean, it's just, again, now in the prospectus for Alibaba, there's 70 pages of risk factors. Basically, you could boil down to China risk, and that's in fact what would happen.
Right. And then add in the consumer risk too, and that's a whole different story. Anyway, we have a lot more coming up. We're going to talk more about the Oscars, and maybe we can debate Barbie more. Who doesn't want to stick around for that? This is Bloomberg Intelligence.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're not kidding. We're taking this Oscar stuff seriously. It's so big for us that we went out to get Bloomberg Opinions columnist Bobby Ghosh. He's got a column out. He's usually talking about world affairs, Middle East, stuff like that.
Sure.
Now, he's got a column out there showing that the Oscars are doomed. So we're getting some smart voices on this whole Oscar discussion. We're taking it pretty seriously. Plus, we're going to talk politics with Jody Schneider. She is political news director for Bloomberg TV and Radio. Talked about the latest on the New Hampshire primary today. Then there's big news, obviously, in the media space, Netflix and wrestling and all that kind of stuff. So we got to go to our go-to person there on all things media and entertainment. That's Bloomberg Intelligence, senior U.S. media analyst Geetha Ranganathan. She'll join us in this hour. So a lot happening. Let's kick it all off with Mr. John Tucker.
All right, the major stock averages, they are mixed right now. Little change. S&P 500, you have 7-11 major industry groups in the index. Lower. Communication services, that's in the lead in the index. That's where you find Verizon. It reported it's finally adding wireless subscribers after several quarters of declines. Healthcare, the biggest drag in the S&P 500. That's where you find Johnson & Johnson. The CFO there said pharma sales will be lower in the second half of the year. They're seeing declining sales of their psoriasis drug. Meantime, Katie Kaminsky at Alpha Simplex Group sees the Fed cutting rates, but not as soon as many investors think.
It's actually not that easy to get inflation down that quickly. It's going to take more time. That doesn't mean we're not in the right path. It just means that this disinflation hope is not really sort of going to happen in a month.
Right now, the S&P 500 down just a point, 48.49 of the index. The Dow Jones Industrial Average 140 points lower. That's down 0.4%. And the NASDAQ 100 up a whopping 3 points right now. Let's do yields for you. The 10-year, which is the benchmark, that's up 4 basis points, 4.14, and the 2-year yield 1 basis point higher. That's at 4.41. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, And that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio, also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Radio. As John was just reporting, not a lot happening at the index level. Let's dig a little deeper. Nora Melinda can help us with that. She covers equities for Bloomberg News. Nora, what are you looking at?
United Airlines is fluctuating between the first and second biggest gainer by percentage in the S&P 500 this morning. It's since paired some of its advances, but it earlier surged as much as 10% for its biggest day in almost 2 years. This is all as profit is poised to beat Wall Street expectations this year as the carrier works to overcome the cost from a fallout of the Boeing MAX planes from earlier this month. Other airlines are all climbing off of this news, and this comes just a day after its CEO, Scott Kirby, criticized Boeing, saying that he was disappointed with what he called the plane maker's sluggish response to the grounding of the MAX 9 aircraft.
What's interesting, too, is that Bloomberg Intelligence, led by George Ferguson, awesome team there, talking about basically United Airlines earnings reinforce the view that U.S. travel demand is slowing. So there is that.
Yep.
Like, yeah, I get it. They did solid. They delivered, especially with costs rising. But it is a cooling demand scenario echoed by Delta as well. The question is sort of how fast.
Did you have revenge travel?
Yeah, but like a year later.
Okay.
So like it was last year I did all the revenge travel, and now not a chance.
Not a chance.
Yeah.
Okay. And international travel?
Yeah. So last year was Florence, it was Paris.
See,
everywhere.
John Tucker and I were the only
all the
ones
fancy,
that didn't go
right? But you're going. Yeah, you did. Didn't you go?
I just went to Aruba.
Right.
Yeah. But,
Me too.
Yeah. Did you?
Yes, back in September.
Very cool. Okay. So I'm just wondering. I think a lot of that, from what I hear from the airlines, that's kind of played out. Now you're back to a little bit more normalized, I guess. Activity.
Right, and like is normalized price into the stock, etc.
Right.
Like that recalibration too.
Right. What else you got?
So flipping over to laggards, we've got the second biggest laggard in the S&P 500. That is D.R. Horton. Just digging back into that for a moment. That's ticker DHI. The homebuilder reported its first earnings gain in 5 quarters, but the firm's increase was less than analysts had initially expected. The stock is slumping as much as 7.7% for its worst day since November 2020. That's pulling peers like Lennar and Toll Brothers and KB Home down with it. Barclays analyst Matthew Booley urges investors to look at this moment as an opportunity to buy on weakness.
It says here that 80% of D.R. Horton's mortgage consumers use the rate buy down incentive.
Right.
So basically they have to increase incentives to get people to buy homes. I can't tell what that's about. Is it just affordability? Or is it just the D.R. Horton actual homes?
Right. I mean, it's a bit of both. I mean, that's what a lot of investors who may be a bit more bearish are nervous about when we're thinking about these home builders. You essentially have to offer incentives and these rate buy downs to entice people to buy from you. So what does that kind of say about, how much of presence and demand that you have there?
Yeah, but it's just, the stocks are just ripping, man. I'm looking over the trailing 12 months, D.R. Horton up 50%, Hovnanian up 180%. Pulte up 100%. So, it's probably a good business for them. But I think the real issue for the housing market, if I'm a housing analyst, if I own these stocks, is as interest rates come down, presumably that's going to free up the resale market, reducing demand for the new homes. And then how does that work? That's kind of what I want to figure out. RTX. What is RTX?
Yes, it's up for its biggest gain since November of 2020. That is the biggest gainer in the S&P 500 right now, up as much as 8.7%. The firm topped estimates after a tough year for its engine unit. It forecasts a 2024 profit that topped expectations as it ramps up work on a costly recall of its top-selling jet engine. So this is very welcome news for the company as it's preparing to transition to a new CEO amid intense investor scrutiny as it works through that recall of roughly 3,000 jet engines.
Right, we forget about that because we're all like, wait, what?
Yep.
It's not Boeing and Spirit Aerospace?
Exactly.
There's more engine stuff?
And again, George Ferguson, Bloomberg Intelligence, he's got the research out there if you want to check it out. BI, go on the terminal for all things Bloomberg Intelligence research. George is one of the best aerospace analysts on the street, and we got him. So it's good stuff. Nora Melinda, thanks so much for joining us. Nora Melinda covers the equities. All right. When we have Bobby Goshen here, we talk geopolitics, Middle East, what's going on there. Now he's got a column out on awards shows. So I go to read it, and then I go see, it's Bobby Goshen is Bloomberg opinion columnist covering culture. Previously, he covered foreign affairs. That's a pivot. Who makes that pivot from foreign affairs to culture?
To Barbie.
It's a Barbie.
I don't know. How do you feel about that, Bobby?
About Barbie, not very much. Everyone's going to be talking about Barbie being snubbed for a couple of categories. I'm going to be the oddball who says, I'm glad to hear it. I hated the movie. Absolutely hated the movie, and I'm glad.
Sarah, I'm just going to step back and let these two go at it.
Okay, well, first of all, I guess it's not made for you. But do you know women of my age group that didn't like it or did like it?
My wife loves it. I know plenty of people, women and men, who loved it.
Okay,
I just didn't like it. I thought it was too loud and too tacky and too exploitative. And basically, it was a marketing campaign for a doll.
Oh, yeah. No,
I didn't get it. I'm too cynical. You
Yes,
see, when you
it's
cover
covering
foreign affairs
right.
long enough, you
okay.
become deeply, deeply cynical. And,
But I don't disagree that in essence it's still an ad for Mattel Barbie, 100%. But to me, that didn't take away from the brilliance of the script and the message that comes across for it. I weep every single time in the same
for
spot.
that, Naiad. Nominations for Annette Bening. That was a terrific movie. You want a message about women empowerment. If that's what you're looking for, that's a fantastic movie.
What I can also do is just watch Barbie that I bought it. So I'm just going to buy it. I bought it and I'll just watch that. But anyway, this is not what your column is about.
Yeah, no.
Your column says award shows like the Oscars are doomed. I feel like I've heard this one before.
Yeah, so, all the award shows, Oscars, Emmys, Golden Globes, the audiences have been dropping precipitously over the past decade. It used to be that an Oscar night would be 40 million viewers, and then it became about 30s. Now it's down to, if they get 10, 12, then they're lucky. Last year there was a little bit of an uptick. I think a lot of people sort of basically dialed in to see if there'd be a repeat of Will Smith's slap on Chris Rock. There wasn't a slap. This year, ironically, the nominations are going to get a lot of buzz for the reasons we've just been talking about. Because Margot Robbie gets snubbed, because Greta Gerwig gets snubbed, there'll be a lot of buzz around the nominations. But for those exact same reasons, I suspect fewer people will watch the actual Oscars. It's too long. It's, there's just too much sort of pomp and circumstance and very little actual content. And most people will consume the highlights on YouTube and on TikTok, on
That's not what the ABC
media.
television network wants to hear. Because
No kidding.
I mean, that's historically these events, which the former CEO of CBS would call "oh wow" events. That's what brings in huge advertising dollars. So, that's just another emblematic of the overall issue of TV cord cutting and so on.
They'll sell out the ads. They sold out the ads last year as well, but at a lower rate. So that's something that they need to worry about. If they'll, sufficient numbers of people will tune in, that advertisers will still remain interested in the event, but for progressively or smaller and smaller amounts of money.
And here goes this. This is the sales pitch that broadcast and cable television have been making to Madison Avenue for 30 years.
Yeah.
Okay, here's the pitch.
I'm ready.
I'm going to give you an inferior product to what I gave you last year. I'm going to charge you more.
That's not going this way anymore.
And it works every single year.
Wait, so they're charging more for this space right now?
Every year, up until the last couple of years when cord cutting became so bad. But broadcast and cable television would say, I know my ratings are down because there's 500 more channels. But still, I have the biggest audience at CBS. Yes, it's half of what it was 10 years ago, but it's still bigger than anything else out there. Oh, by the way, for that, I'm going to charge you another 5, 6, 7, 8%. And that worked forever. Now the issue is...
Yeah, I don't think that can be sustained for very much
longer.
We'll see.
I don't know.
Yeah, I think, again,
unless you're the Super Bowl. If you're the Super Bowl, you can go out and
sports is a different category.
Yeah.
But, sports... If you're a fan, you don't want to just watch the highlights. You want to watch the live performance. But with Oscars, with any award show, more and more people are quite happy just to see the highlights immediately after the award is announced. They don't want to watch the whole,
awkward moments.
The awkward moments, the songs, the skits. It seems like too much of a muchness.
That used to be must-watch
television. Really, I know.
It goes to John Tucker's The Whole World's Coming to an End.
Well, I would have Oscar parties. Literally, we'd do boats. We'd put in money. We'd people walk home with a couple $100. It was like
Can you bet on the? I guess you can.
With people in my home, sure. I mean, in the reality of the world.
Maybe I might be into it. Then.
Maybe. But what I also wonder too is, do you think that these kind of live events will go the way of sports in different ways of viewing it? Like we saw WWE and Netflix, for example.
Yeah.
Would Paramount be like, hey, let's just air it streaming and save some? Is that a thing?
Well, I think you probably, if the audience continues to shrink, they'll have to find new ways of making it relevant. In time, I think you'll see the duration of it shrink. I don't think a 3.5-hour program, which invariably goes closer to 4 hours, I don't think that's sustainable anymore. This year, they're bringing it forward. They're starting broadcast an hour early because they're conscious that in that last hour, past bedtime in the East Coast, a lot of people, the next day is a school day, lots of people just switch off. And that's a real problem for them. So they're bringing it forward to try and see if they can sort of juice the audience that way. I think you'll probably see certain amount of stunt casting in the people who are hosts or presenters. We've seen that happen in the Olympics, for instance. You know, Olympic audiences have been down. NBC's been bringing in people like Snoop Dogg to try and get audiences interested. I say, okay, let's have a switch and get some Olympic performers to present the Oscars. I'll watch Simone Biles.
Well, ABC doesn't
Oh,
have
I
the
would
rights.
totally watch
ABC
one.
doesn't have the rights to the Olympics, so you're not.
That's
gonna
true,
see
but you
that.
can bring an athlete in. So
Yep, exactly. Well, that's a good thing. I mean, bringing in athletes to just some stunt hosting is
I think you'll see progressively more and more desperate attempts to try and hold on to that audience, but I think that ship has sailed.
What else are you working on right now? What else catches your eye?
Well, culture is a very, very sort of large
beat,
and there's a big tent, and there are lots of different aspects to it. I'm sort of taking a nibble of the food, some food stuff, no pun intended. You know, I'm trying to wrap my head around the evolution of the entertainment business. Just this fact that it's becoming more and more sort of desegregated, and you can't rely on the old tentpole events and on the old ways of watching and consuming entertainment. People are watching entire movies in segments on TikTok. That just, you know, my head explodes at the thought of that. Can you watch an entire movie 2 minutes at a time? But people are doing that. I've written about that in the past, and that's very interesting to me. You know, just to sort of come back to the Oscars, that slap that we were talking about. Within 24 hours of that slap, 50 million people had watched it on YouTube. It broke the existing YouTube record. 50 million people. How many people watched it on ABC? 12 million people.
So have we become less cultured?
I don't think we're less cultured, but certainly
I want you to come up with an index like the Dow or the S&P 500, the culture index.
Okay.
I don't know what components will go into it, telling us, you know, are we less or more cultured?
I think our attention span has certainly been greatly reduced in part because there's just so much competing for our attention, and Hollywood and the theaters have been taking for granted for years that we will go in and watch a movie, you know, 2.5 hours at a stretch. In the case of some of this year's big blockbusters, 3.5 hours at a stretch. But I think fewer and fewer people are going to do that. That's just too long.
It is. I mean, it's that's what I think the big issue is. And you talk to the filmmakers in Hollywood, and they're frustrated like crazy because they feel like the art form of cinema is dying. And so, but then you get Martin Scorsese, who I think goes to the other extreme with his film.
That's because he's Martin Scorsese.
Yeah. That's right. And I walked out of the theater saying, Martin Scorsese took me for granted. Yeah. He made a 3.5-hour movie when it very well could have been a 2-hour movie. I loved the movie. I love the actors, but I did not have a good experience. If I saw him on the street right then, I said, did not.
That's what did Christopher Nolan. Oppenheimer was like 17 hours.
I know.
Yeah. It didn't have to
not
be.
really.
The interesting thing though, here's the weird thing. We're perfectly happy to spend an entire day binge watching a TV series.
Yes. Yep.
So 8 hours, 9 hours at a stretch, just breaking for lunch and bathroom breaks. But we don't want to watch 3.5 hours in the cinema.
Yeah.
So Hollywood has to wrap its head around that.
So why is that? Is that what John Tucker's saying, that we're all just getting dumber?
I think no. I don't think we're getting dumber. I think some stories are better told in the long format. This idea of binge watching is relatively new. The opportunity didn't exist before. And I think a lot of really intelligent directors are taking to that, recognizing that that's where we live now. That's where there is appetite now. And if that means that we make fewer movies and more interesting, long-running television shows, then so be it.
I just think that people can you get on your Instagram Reels, you look down, you look up, it's 3 hours later.
Yeah, well, there's a rabbit hole.
Out of control. Yeah. I mean, and for somebody who I'm sensitive to that stuff, I don't want to get anywhere near that. It happens. And so imagine if you're sitting in Hollywood and you're like, wait a minute, this knucklehead just got entertained rapidly for 3 hours on user-generated content and just garbage. What happened to the $200 million movie I just made? That's kind of the big issue. Bobby Ghosh, we were talking more about about this with Bobby Ghosh.
You just made John Tucker cry.
I know. It's just, but he feels passionately about this whole dumbing down of America, and there's a lot of data to support it, quite frankly. So, Bobby Ghosh, thanks so much for joining us here. Looking at the markets here again, we've got the Dow up about 0.3%, but that's about it. Not a lot of movement out there. We'll have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, they've just all turned lower right now. Not a lot of movement in terms of percentage basis. We did get a slew of earnings today. That's in the driver's seat right now. And it's kind of instructive to look at the Dow Jones Industrial Average for the results. Best performing members, Verizon and Procter & Gamble. Verizon up 5.5%. Procter & Gamble, that's up 4.2%. The worst performing members, 3M and Johnson & Johnson. Look at 3M right now, down over 11% at this point. China also in the news. U.S.-listed China shares gaining after Bloomberg reported Beijing considering a big package of measures to stabilize their falling stock market. And then finally, in the crypto space, Bitcoin has fallen over 20% since the January 11th launch of the first ETFs. Speculators becoming a little more cautious about the potential impact of the products. Again, S&P 500 lower, down just 3 points. The Dow 155 points lower. The NASDAQ 100 is right now down 7 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. So head over to youtube.com, search Bloomberg Radio. A new Boston Globe Suffolk University poll released Tuesday suggests Trump was the bigger beneficiary of Florida Governor Ron DeSantis' decision to drop out of the race Sunday. Trump now leads Haley by 22 points, up 3 points from the same poll on Saturday. Let's figure out what's going on up there in Iowa. Jody Schneider, political news director for Bloomberg TV and Radio. Jody, if I'm in the Nikki Haley camp, what's a good day for me today? Just not getting squished? I mean, what are they saying?
Well, they need to have at least a very strong second place showing. Obviously, they want to win. If they win, it would be a big upset, and that would change the nature of this race going forward. If they have a strong second, she can say that she was competitive to Donald Trump and make that case. But anything after first place would be a question of when and if and when she should drop out. The inevitability of Donald Trump has been the story here. Is it inevitable? Can she unseat that? And we'll know tonight. But second, of course, is second, and she was third in Iowa. And going into South Carolina, all of that would not be what she wants and what she needs. Because South Carolina, in another month, is going to be a critical race. She's already behind Trump there, and that's her home state. It could be a very bruising few weeks if she chooses to stay in, and could be an embarrassing defeat. So that'll really be the question after tonight.
Jody.
We'll see how she does, and if she doesn't do really well, is she going to leave the race?
Jody, what is the vibe on the ground for voters? Usually in Trump counties, for example, the support is so passionate. For New Hampshire, that overwhelmingly has so many independents, like, is there passion for Nikki Haley? Is there passion for Donald Trump? Is there passion for Joe Biden? What's your read?
Well, there's certainly among Trump supporters, there is a lot of passion. Those rallies are quite passionate, as they are typically for Trump rallies. For Nikki Haley, a lot of these folks who we've talked to and we've gone to her rallies are about not voting for Donald Trump, that they just can't vote for Donald Trump and they're looking for something else. They like her. I think there is support for her vision, that it's younger, it's fresher. She's not somebody who has been, in office, in part of the Washington machine, that kind of thing. She was a governor. She was the ambassador to the UN. I think a problem for her, she didn't hit Trump hard enough until late in the campaign. And so a lot of people wonder, well, why are you running if he's okay? But who she will do well with are these independent voters. As much as 40% of the electorate here are what they call undeclared or independent voters. And you can, if you are an independent, you can vote in this primary. And that's who she's hoping to do really well with. Also, New Hampshire's a state that has confounded the odds before. They have, they are notorious for surprises, and the people here really like that. So if she was going to do that anywhere, here would be the place.
Jody, if you get to the, you talk to people, the RNC, the Republican National Committee, do they believe Trump can beat Biden?
I think they certainly do. I think they're, they are looking at Biden as somebody with low approval ratings and somebody who there's not a lot of enthusiasm for. Now, there's an enthusiasm gap, I think, on both sides, but the question is, can they try to rally enough of their voters? It'll be a turnout game if it's a Trump versus Biden ticket, which it's increasingly looking like it will be. It really will be, can you turn out those voters? Can you turn out enough voters, and particularly in those key swing states? That's what it will come down to if this is the ticket.
Jody, what I find interesting is what voters are voting on. You mentioned voting for Nikki Haley because she's not Trump versus like loving her. We know that voters are extremely worried about the economy, but you take a look at, say, the University of Michigan survey last week, and they're slowly feeling better. Inflation expectations have come down. Expectations on current conditions really moving higher. What's your read on what's that number one thing that voters want to do?
Well, I think it's still the pocketbook issues, Alex. I mean, people, every time they go to the grocery store, they're reminded that they're paying more than they were, a few years ago. Every time they fill up their gas tank, it's like a reminder. Even if the economy's doing better, they don't necessarily credit the person in the White House for that. They're faulting him for the fact that a couple years ago they were paying less.
It's like being a parent.
So I think that's a real issue for Joe Biden going forward.
Jody, does it matter who former President Trump may or may not select for his running mate here? Does anybody care?
I don't think it makes a bunch of difference. I mean, it used to. It used to be you would pick them from a different part of the country than you were from. You would, obviously with John McCain picking Sarah Palin as a woman, they thought that would be a good move. But I think it matters less, though. I think that if Trump is the nominee, he will make this a long kind of process and make it dramatic. I think there will be quite a bit of speculation and intrigue with that. So it matters less. But again, the other thing that's going to happen here is if we know who the party, what the matchup is, say, maybe after tonight or certainly in early February, that's a long time for a general campaign. So the parties will be trying to do things that will, get some voter enthusiasm, that will keep that voter attention. And the vice presidential sweepstakes on the Republican side will be one of those things.
Hey, Jody, do we know the financial condition of the Trump campaign? Because apparently there's some, large donors out there who are not supportive of the former president. If this is going to be a long, drawn-out campaign, how is he set financially, do you think?
Yeah, that's a really good question. And that is one thing that Joe Biden has really going for him. He has amassed a serious campaign war chest. And they haven't really begun to deploy that yet. One of the, one of the benefits of incumbency is, you get coverage, right? Just by being president, you go out and give a speech and everybody covers it. We haven't really they haven't had to spend yet, and they have a very large war chest on the Democratic side. On the Republican side, I mean, he has had, unlimited coverage, Donald Trump, but he has not been able to necessarily get back some of those big donors that he had in 2020. And so that'll be a real question. Mm-hmm. Can they refill those coffers? I think there is some waiting on the sidelines to see if he is the nominee. And there was a lot of hope that among some of these donors that he might not be. They put their money elsewhere. But now, once he is the nominee, I think that will start to gravitate toward him. The other question, the other thing we haven't talked much about is third party, because this early on, with this kind of lack of enthusiasm for these two candidates among people in their own parties combined, you will see more talk of this possible third-party candidacy, this no-labels group that's sort of been waiting to see whether it is going to be Trump versus Biden. They may emerge with someone, or a third-party candidate may emerge himself or herself.
Jody, really appreciate it. Thank you so much. Jody Schneider, political news director for Bloomberg TV and Radio. It sounds like she's in a bar, like there's a party going on. I think the studio is actually in a big bar.
Is that right?
I think that's true, because you can see on the video there's like beer taps.
When you used to cover the campaigns, you would, and it's no reflection on a bias on the part of reporters, but my experience was you would always want to cover the Democrats because they're the ones who always had the open bar.
Really?
The Republicans made you pay for everything.
Well, this all tracks. This completely tracks.
Self-explanatory now. So,
but I think what'll be interesting. Fun was a different word, but interesting is the rhetoric and the spin that comes out tomorrow, right? Yep. And sort of what the pundits wind up saying about who won, what winning is, what that looks like. And I'm really interested in big Wall Street money. Yep. What do they do? Do they really go behind Trump? Do they get more involved in the Senate, for example? They're clearly not going to go to Biden, so what do they do?
I know. It's interesting because, Nikki Haley has, as we've heard this morning, has a fundraising event coming up soon, which was going to have a lot of that big money. And if she's out of the race, where does that money go? So we'll have to see. So again, the primary up in New Hampshire as we speak. Bloomberg full coverage. Joe Matthew and his team 12 to 2 today.
Yep.
Then 5 to 6 p.m. These are all East Coast times, and then 8 to 10 p.m. tonight. So Joe Matthew, Kaylee Lines, and all the team there will have it for you. So we are all over that stuff. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
All right, thank you, Paul. Secretary of State Lloyd Austin made his first public appearance since he was hospitalized earlier this month, urging a meeting of the Ukraine Defense Contact Group to, quote, dig deep and support Ukraine's forces in their battle against Russia.
Putin continues to sacrifice staggering numbers of Russian troops in his rash and reckless war of choice.
The defense secretary clearly speaking by video link there as he made the pitch aimed at Republican lawmakers. Israel has taken its worst single-day loss since its all-out assault on Hamas began in Gaza. Bloomberg's Ross Matheson says the question of hostages makes this conflict even more difficult.
We know there are conversations going on still involving Qatar and Egypt to try and negotiate a ceasefire to allow the release of more hostages, and it is a concern, but by and large the broad support is that either way that this conflict needs to continue to achieve what Israel sees as its necessary goals.
That's Bloomberg's Roz Matheson. It is primary day in New Hampshire. Bloomberg's Laura Davison says there's enthusiasm around both candidates.
Both Haley and Trump gave these very dramatic speeches last night, but he really sort of made the case and tried to project this air of inevitability that he would be the one to win in New Hampshire today and quickly seal up this nomination.
Bloomberg's Laura Davison in New Hampshire reporting President Biden gearing up for a general election campaign, focusing on one issue in particular, as we learned from Bloomberg's Jody Schneider, who is also in New Hampshire.
He's looking at basically mounting this fresh push on abortion rights, which is really part of the broader strategy to try to sharpen the contrast between the sitting president and Donald Trump.
Bloomberg's Jody Schneider reporting from Manchester, New Hampshire there, where President Biden, by the way, is not on the ballot after pushing Democrats to move their first primary to South Carolina. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are all lower, not by much. The S&P 500 down just 4 points at 48.45. The Dow Jones Industrial Average 183 points lower. That's down 0.5%. The Nasdaq 100 down 19 points, a decline of about 0.1% right now. With the corporate earnings, they remain in focus today. By and large, we've seen estimates pretty much hold up for the year so far. United Airlines jumping on better than expected earnings, leading airline stocks higher. You have Verizon advancing after the telecom giant's guidance for this year impressed analysts. That is the best performer right now, the Dow Jones Industrial Average. Well, rate cuts aren't too far in the background. Michael Gapin at the Bank of America Securities, he remains confident the Fed will cut rates as soon as March.
What gets them to cut in March is the inflation data. That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation and the fact that we're 6 or 7 months with annualized core PCE running at 2% or less.
United Airlines Chief Executive Officer Scott Kirby criticizing Boeing's handling of manufacturing miscues. And he now says United reconsidering its order for the largest 737 MAX model, which already is years behind schedule. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. One of the big company news stories of the day, topical, is Netflix. It has acquired the exclusive rights to Raw, as well as other programming from World Wrestling Entertainment, marking the streaming service's first big move into live events. The streaming giant, big bucks here, has agreed to pay $5 billion over the course of the 10-year deal. Let's break this down with Geetha Ranganathan. She covers all the media stuff for Bloomberg Intelligence. She joins us via Zoom from the Bloomberg Intelligence headquarters in lovely Princeton, New Jersey. Geetha, this is a big move for Netflix here because they've kind of resisted getting into live events and sports and that kind of stuff. So what gives here?
Yeah, what gives, I think, Paul, is advertising. So they resisted advertising too for the longest time till they were kind of finally forced to bite the bullet and use advertising to kind of reinvigorate subscriber growth. And so far, I mean, it's worked, maybe not as much as they had hoped it would, which is why they kind of need to invest in their business in order to kind of really build that critical mass of, ad-supported users that, then they can sell kind of advertising to. And so I think this is really the real play here for Netflix is to chase those advertising dollars.
How much could it actually help? Like, what kind of numbers are we looking at? Like X amount of its revenue now that could be X amount in 5 years?
So right now, the revenue is de minimis, right? They launched the advertising tier in November of 2022, kind of had a really, really slow start. But the most recent number that they reported was 23 million monthly active users. So we think that translates roughly to about 12 million or 13 million subscribers on the ad platform. Ultimately, what we want to be able to see for scale, we know that Amazon Prime is actually launching, I think just in a few days, they're kind of launching video ads on Prime Video. And the audience right off the bat that they've kind of cited to advertisers is 115 million. So what you really kind of want to see is 50 million, 100 million. That is really kind of the captive audience, the critical mass that we're looking for. In terms of how much can advertising potentially be, so right now Netflix is about a $35-40 billion business. I think if it takes off in a big way, probably in the next 2 years, I wouldn't be surprised if advertising made up about 10 to 15% of Netflix's revenue.
Yeah, that's a lot. So, Geetha, is this maybe the first step, dipping the toe in the pool of maybe becoming a bigger player in sports overall? That, again, they've kind of resisted and been very adamant about they don't have an interest in sports, maybe because of the price tag. But is this maybe the first opportunity here?
I definitely think so. So yes, they have spoken about the price tag. Again, this is, definitely a hefty price tag. It's $5 billion over a span of 10 years. So they're spending 500 million a year. But again, they're not necessarily betting the farm, right? Because if we wanted to see Netflix do something transformative, it would have to be like maybe buying a gaming studio, which would be upwards of, 15, 20, 30 billion dollars, or maybe just buying a film studio again, which would be a huge price tag. Of course, sports rights are also expensive. This kind of, I think, allows them to dip their toes a little bit. It's still 500 million. It's not some crazy number like, what some of the other big media giants are paying for sports rights. You look at Disney, they're paying upwards of $10 billion just for all of the sports rights that they have. So I think relatively it's a way for them to kind of experiment, test the waters, see how it plays out. And then remember, on that 10-year deal with TKO, they do have an option after 5 years to kind of walk away from the deal if they're not happy with how it's playing out for them.
But still, I mean, for TKO, like, it's kind of double what they were getting with regular cable. So how much is the content spend concern worth to the share price of Netflix?
Oh, definitely. Content spend, I think, is definitely going to be one of those, worrisome factors for Netflix. But having said that, okay, so they have said that they're going to spend $17 billion this year on content. Obviously, it's probably going to go up to about $20 billion over the next couple of years. But then look at their free cash flow profile. They're throwing out $6.5 billion in free cash flow in 2023. That probably goes to about $10 billion in the next few years. So they do have a lot of cash at their disposal. They did say that they're going to buy back shares, but we also want to see them invest in their business. And so this is a great way that they're investing in their business. Ultimately, I think to build up their advertising business, it's not just content. They're going to have to invest in their tech stack, in their ad tech stack a little bit more, to kind of really get more traction and more scale.
All right, Geetha, let's step back a little bit on the streaming business here. You just, threw out some big free cash flow numbers, which, boy, I remember the days when they had negative free cash flow and they were just trying to get the positive free cash flow. How about the other competitors out there? What's the feeling? We're, 2, 3, 4 years into this whole streaming business here. Is there room for other players here? How do you think this might shake out?
Yeah, Paul, I think, the streaming wars are definitely over at this point, and we know the winner is Netflix. They've just completely decimated the competition, if you will, whether it's in terms of subscriber growth, but more importantly, subscriber growth doesn't really, it's important, but it's not the be all and the end all. What the street is really focused now on is the financial side of things, is the profitability metrics, and Netflix has kind of absolutely blown it out of the park. And so as we kind of look at, what we're kind of trying to see is the margin profile. So right now, if you look at Netflix's streaming business, it's a 20% operating margin, but they have committed to about 300 basis points of average annual increase. So just push that out another 3-4 years. Very soon, we could be seeing upwards of 30% operating margins. Can any of the other players like a Disney, like a Warner Brothers Discovery replicate that? They did have those margins in their cable TV business. Unfortunately, in the streaming business, it's going to be a really, really long haul. We do think that they could potentially maybe get to, 10%, 15%, but it's going to take them a very, very long time. And who knows how the whole landscape is going to shift by that time.
Paul, how do you watch stuff?
Kind of, the only stuff I watch really is sports.
Okay.
And then I will stream some stuff.
But do you still have traditional cable then to watch the sports?
Yes, for the broadband and for the sports.
Okay. But if you can get sports on streaming, would you cut the cord?
Well, I need broadband access.
Oh, sure.
So, yeah.
But you can get that.
Yeah, that's right. And that's basically what it would be. And Geetha, the cord cutting, I was going to Alex's question. Where are we there in terms of cord cutting?
It's bad. It's really bad, Paul.
If Paul's even talking the words, that feels bad.
It's close to an 8 to 9% erosion. And just to kind of give you some context here, back in the day, Paul, when you were kind of covering the space very actively, it was 104 million pay TV households. Right now, we're down to about 70 million. And and kind of the outlook is we're probably going to go to 50 million in the next couple of years.
Wow.
And then who knows where we're headed after that.
That's a tough business. All right, Geetha, thank you so much for joining us. Always feel a little bit smarter after checking in with you. Geetha Ranganathan, she covers all the TMT space for Bloomberg Intelligence. She's based in our headquarters in Princeton, New Jersey, joining us via Zoom. And that is a tough erosion to what was a phenomenal business model. When every household was paying its $80 or $90 a month, everybody in Hollywood was making money those times have changed. We're going to have more coming up. This is Bloomberg.
Now, your company news headlines on Bloomberg Radio.
And I'm John Tucker, the Bloomberg Newsroom. We'll look at some of the company news. Let's start with Verizon getting a pop today. In fact, it's one of the best performing stocks in the Dow Jones Industrial Average. They added the most mobile phone customers in a couple of years. A turnaround story here. Verizon's consumer group adding 318,000 mobile subscribers in the period. The Verizon had fallen behind its wireless peers in subscriber growth for years. And then 3M, worst performing stock in the Dow. Maker Post-it notes, among other things, posting earnings. 2024 profits and sales growth they sell will fall short of estimates. 3M began slashing thousands of jobs. That was part of the restructuring push that helped lift profit margins and cash generation in the second half of last year. But now they say broader economic environment, that does look like it remains muted at this point. And New Brunswick, New Jersey, Johnson & Johnson opening its books this morning. They say fourth quarter earnings beat analyst estimates. Sales in the drug and medical device units exceeded analyst expectations. But the shares, they fell. The CFO there said pharma sales are going to be lower in the second half of this year on declining sales of Stelara. That is their psoriasis drug. And, of course, you heard from Gita at Netflix laying the smackdown on the streaming war for live events, cutting a 10-year, $5 billion deal with World Wrestling Entertainment to stream WWE Raw, if you know what that is, in the U.S., and every other WWE event outside the United States, and that starts next year. The president, Nick Khan, says this is about growing a global audience for sports and entertainment, as he calls it. The parent of WWE TKO surging on this news today. And that is your company news. I'm John Tucker.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, looking at this market right here, we do have the Dow off 180 points. That's about 0.5%, but the S&P and NASDAQ pretty much unchanged on the day. Yields a little bit higher, 10-year Treasury. It's only about 4 basis points. Let's call it 4.14% on your 10-year Treasury. WTI crude oil off just slightly here, $74.50. And gold up slightly, $2,025 per ounce. Bitcoin off 1.5%, 39,200 on Bitcoin. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Morris.
All right, thank you, Paul. The Biden administration has allowed more than 1 million migrants to live in the United States using what is known as humanitarian parole. Texas Republican Congressman Mike McCall says that's got to stop.
Need to go back to remain in Mexico, and that we got to push the border out and stop playing defense on the 1-yard line.
Researchers at Syracuse said the number of migrants with pending immigration cases is now larger than the population of Chicago. Florida Governor Ron DeSantis may have endorsed Donald Trump, but he says he is ready to veto a proposal that would help pay Trump's mounting legal fees. Florida's chief financial officer has proposed a bill that would create a Freedom Fighters Fund to provide up to $5 million in financial support to help defray some of Trump's legal bills. Oppenheimer, is leading the Academy Awards race with 13 nominations. Barbie, which was the summer's biggest box office hit, was nominated for 8 awards, including Best Picture. And for the first time ever, the Associated Press got a nod for 20 Days in Mariupol.
The war has begun, and we have to tell its story.
Got a Best Documentary nomination. The Oscars will be held March 10th in Los Angeles. Hundreds of sea turtles that had to be rescued from that nasty winter blast last week down in Texas, they're being released back into the wild.
All sea turtles are either endangered or threatened under the Endangered Species Act. So when you're dealing with a population like that, every individual matters.
Jesse Gilbert heads the Texas State Aquarium, says they've spent days getting the little turtles all warm again. And research from Gallup puts a price tag on workplace unhappiness. Disgruntled employees, they say, cost U.S. companies an estimated $1.9 trillion in lost productivity last year. 1/3 of respondents said they are engaged at their jobs. Half are giving just minimal effort. You know what they call that, quiet quitting. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
Amy Morris, thank you so much. We appreciate it. Boy, the United Airlines CEO, he's not happy with Boeing. United CEO exploring MAX 10 alternatives after Boeing misstep. So United Airlines Holdings Chief Executive Officer Scott Kirby criticized Boeing's handling of manufacturing miscues and said the carrier is reconsidering its order for the largest 737 MAX model, which is already years behind schedule. United has already started to build an alternative plan that doesn't have the MAX 10 in it, Kirby said, adding that would probably entail changes to the airline's order book. And he made an interesting point here in our reporting. United CEO blamed a culture at Boeing that predates the era of current Boeing CEO David Calhoun, dating to the company's 1997 merger with defense giant McDonnell Douglas.
Yeah.
That's like 30 years ago.
I mean, that'd be really bad. Like if you cancel orders, because a lot of these guys lock in orders like years and years in advance because it takes so long to get these planes. So to get out of the queue and then have to go to the end of the line to an Airbus queue to get the planes, like that would be a really big deal. I guess I wonder how much capacity they have with their current planes and how usable they'll be for how long. That will probably help to dictate that decision. Or is this just like the bluster? Basically, to push Boeing to do something different? I don't know.
Well, it's interesting. The reporting here in the Bloomberg story, the public airing, going to your point, the public airing of frustrations by Boeing's largest customer is unusual in an industry where rifts between trade partners are typically discussed and resolved in private. Well, Kirby said a resolution was in sight for ending the MAX 9 grounding. He warned that United was losing patience with the delays that seemed to follow in certifying the larger MAX 10 as U.S. regulators step up their scrutiny of Boeing.
I feel like there's a line to be made from Amy Morris's story about the disgruntled employees to, I don't know. I feel like there's something that we can glean on this from like a survey of disgruntled employees to Boeing and United.
Exactly. I don't know. My personal opinion on the whole Boeing issue is they never should have left Seattle. They never should have left the corporate headquarters, moved from Seattle. My engineer friend didn't like it. All right, Balance of Power with Joe Matthew. That comes up right now.
the world of politics to the world of business. This is Balance of Power. Live from New Hampshire.
It's finally here, the first in the nation primary. Welcome to the fastest show in politics. Live from Manchester as voting gets underway here in a contest that could decide the Republican nominee for president as soon as tonight. We'll have the latest polling for you over the course of this hour, along with insights from the most important political voices in the Granite State in the next 2 hours here on Bloomberg Radio, on the satellite, and on YouTube. A conversation as well with Democratic presidential candidate Dean Phillips. It's all ahead after we get a look at Wall Street. We'll do that right now in New York with Charlie Pellet. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Day 2 in the new time slot. We have got the Dow trading lower, S&P, NASDAQ both higher. Truth be told, though, S&P little changed right now. Let's call that unchanged on the day. We've got the NASDAQ Composite Index higher by 6, up by about 0.1%. NASDAQ 100 also little changed, while the S&P down now by 0.5 point. Dow Industrials down 169, drop there of 0.5%. 10-year yield 4.14% with a 2-year right now 4.40%. As Joe mentioned, voting underway in New Hampshire. But what about voters and the economic backdrop? Carl Riccadonna is chief economist at BNP Paribas. He was interviewed this morning on Bloomberg Surveillance.
Tying into today's events in New Hampshire, and as we think about the presidential cycle, there's weak economic sentiment from the public, but I think that over the course of this year, as it becomes more apparent that inflation has moderated, and it becomes more apparent that the labor market is still on a relatively healthy footing, this economic messaging, I think, is going to play favorably into incumbent politicians, most importantly, the top of the ticket.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. A lot of earnings out today. RTX Corp up now by 5.7%. It is forecasting 2024 profit that topped Wall Street expectations as the aerospace and defense giant ramps up work on a costly recall of its top-selling jet engine. Also out with earnings this morning, GE, and it is predicting profit that will fall short of Wall Street's expectations as the manufacturer continues to see a disparity between its growing aerospace operations and a recovering energy business. GE down now by 1.5%. After the bell today, of course, we will be hearing from Netflix. Netflix up now by 0.2%. Gold up 0.2%, 20.25 the ounce. West Texas Intermediate crude little changed, up 3 cents right now, 74.78 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, we thank you. Back to Manchester here, where we've been on the ground for several days. It's actually time to vote. What a great feeling after talking about polling for weeks and months. All the speculation and the prognosticating will not matter by the end of this day. The polls close beginning at 7. They do it a little bit differently in New Hampshire. The final polls will close at 8. And we expect a pretty early call from everyone we're talking to here. We have the latest on-the-ground polling in this rolling poll by Suffolk University that's they've been working with the Boston Globe and USA Today. It's not looking good for Nikki Haley. Remember, this is the poll that had them in within 10 points a week ago, and Donald Trump just hit 60% for the first time in this poll. Nikki Haley at 38%. We've got 22 delegates on the line, and look, New Hampshire's known for surprises. That's partly why we are here, and this is also where we begin our conversation with Bloomberg's Lauren Dzinski, who used to do this for a living. It's great to see you in Manchester, just like the old days. And the times that you spent covering the State House in Massachusetts, you covered Charlie Brown, you covered a guy named Scott Brown, who we talked to here last night. I just wonder, Lauren, your thoughts on where the Republican Party is and where it's turning here in New England. We've been talking so much about independents who are going to make up this decision. Where are the demographics now compared to a Republican Party that elected Charlie Baker?
That's a really good question. I think when we talk about New England conservative voters, we often think of the flinty Republican from New Hampshire.
Sure.
And, you know, it's really, I think, what it comes down to tonight is a gauge of is this still the party of Donald Trump?
Mm-hmm.
He won New Hampshire in 2016. In 2020, is he going to do it again tonight?
Mm-hmm.
And I think if you look at Charlie Baker, the nation's most popular governor at the time, who was a Republican despite that, didn't seek a third term in office. There's a number of reasons why he didn't run for re-election in Massachusetts, but it's also because he couldn't win a Republican primary in his own state. And I think those demographics kind of bear out in the state just north of Massachusetts, which is New Hampshire, which is where we are right now.
And they share a lot of folks, right? Conservatives who work in Boston, who've moved to New Hampshire for the more favorable taxes or whatever policy it is that turn them on or off in one state or the other. There are a lot of folks who are considered Massachusetts natives, or I guess former residents, who are going to be making these decisions here in New Hampshire. So how do you put that all together? Is this the same New Hampshire that elected Donald Trump in 2016?
I mean, I think if anything, this is even more so the New Hampshire that elected Donald Trump in 2016.
Okay. It's Trumpier is what you mean.
Yeah, and I think it's also, it lends itself to the Trump campaign. The Trump campaign is better organized and better run than it was in 2016.
Mm-hmm.
Even in Iowa, you know, you had the Trump caucus captain hats that were gold and white that were an absolute asset. That wasn't happening in 2016. And the same thing is true in New Hampshire. Last night, Donald Trump did a rally in, I believe, Laconia, which is quite far north, and he admitted when he was at his rally that, you know, my advisors recommended that I come all the way up here to speak to you guys. And, you know, he talked about how he had all these supporters packed into a room. It speaks to not only the steadfast and, as we've seen in that latest Boston Globe poll, the building support that Trump has, but also just the resiliency of it all and the attention by the Trump campaign in recognizing that New Hampshire is a fertile ground, even though Nikki Haley barnstormed the state.
Right.
And how is that going to work out for her?
Well, it starts making you wonder if the New Hampshire primary is still the New Hampshire primary.
Yeah, I mean, I think the sentiment here, having been on the ground in 2016, it's a different vibe. Also, that has to do with the Democrats not, you know, Joe Biden is not on the ballot this time around, and so there's the whole write-in campaign or whatever. Also, many Massachusetts electeds will have a hand in trying to have Joe Biden not suffer an embarrassing defeat.
Yes, right. We'll see how that goes.
Yeah,
Dean
best of
Phillips
luck.
thinks he can embarrass Joe Biden. That's a whole other storyline here.
Yeah, sorry, I didn't mean
but
to
no,
jump
in terms of
around.
not at all. While you're with us, and you're going to be running headlines on the terminal tonight, right? The people need to know this is the person behind the curtain. When you hear the news break later on, are we going to get an early call?
Listen, I'm no betting woman.
Yeah.
However, I think it's very likely that if we see Trump perform the way that we have seen the polls show, I think we're going to get a pretty early call for Trump.
Polls close at 8.
Polls close at 8.
Some say 8:01. You're going to know who won, but we'll find out. About
I mean,
that
listen,
This is
you'll
why we're
know
gonna be
when the
live.
headline crosses the terminal.
Absolutely. Thanks for joining. Come talk to me sometime in Washington. You're always welcome here. Lauren Dazinski with us here on Balance of Power. I'm Joe Matthew in Manchester, and we're going to get an update now on things in the field from Bloomberg's Tyler Kendall, who's been watching the polls since things opened fairly early this morning. Tyler, what are the stakes in this election today?
Hey, Joe. Well, as you've mentioned, voting is well underway. I'm starting to see people walk around downtown Manchester with the I voted stickers. That's how you know we're in the thick of it. Like you mentioned, polls are going to start closing at 7 p.m. The last polls will remain open until 8 p.m. Now, to put this into context for you, there are 22 delegates at stake in New Hampshire tonight, but that's less than 1% of what's needed for the Republican primary. But New Hampshire's first in the nation primary status means that all eyes are going to be on this race tonight, especially as the contest begins to winnow. Now, I know that both you and I are also going to be watching for the independent vote. This is an open primary, and independent voters make up the largest share of New Hampshire voters at 39%. Now, the polling and the strategists are telling us that this is the needle that Nikki Haley is trying to thread with these more moderate independent voters. But we have to remember, in 2016, former President Trump handedly won independents in the 2016 New Hampshire primary. It ultimately helped him win the state by 20 percentage points. The chair of the New Hampshire Republican Party says that that is the narrative he's going to be watching, that these independent voters are former President Trump's to lose. He's also going to be watching for turnout. And I can tell you from the voters I've spoken to here on the ground, there's a lot of enthusiasm for getting out tonight for both for and against the former president.
All right, Tyler Kendall, we thank you, and we'll meet you a little bit later on Balance of Power. Tyler will be with us for the duration, and that's our plan. We've got many hours of programming coming to you live here from Manchester today, here on Balance of Power on the radio and on YouTube, later on Bloomberg TV, and special coverage tonight that will begin at 8 p.m. Manchester time, if I can say that, at least for today, as we add the voice of Lizzie Guyton now, a voice of experience, having run Scott Brown's campaign for Senate here in Massachusetts, but also represented Governor Charlie Baker, the aforementioned governor of Massachusetts. Lizzie, it's great to see you.
Thanks
You're
for
at
having me.
South and Hill Strategies now, a co-founder, Republican strategist, and the first person we called when we knew we were coming up to Manchester. Thanks for making your way north. You're like those voters we were just talking about. You live in Massachusetts, but New Hampshire is also your backyard, and in some cases, these voters who go to work every day in Mass live here. And I wonder how you describe the demographics that we're talking about, because they're constantly changing. And when you look back to 2016, that might not be the best guide.
That's right. And right now, 40% of the electorate is unenrolled, and they all have the ability to go pull a ballot today. These are good conditions for Nikki Haley to not only pull Republicans and independents that are looking for an alternative to Trump, but there also could be some independents that are looking to an alternative to President Biden, who has snubbed the Granite State for the primary.
So talk to me more about this elusive independent vote. People not from here are hearing about it, these undeclareds. Who are these people? Where are they from? What are the demographics like? Is it what Donald Trump says, that they're kind of Democrats in disguise who want to go in and infiltrate this process with a protest vote? Are these Republicans who are looking for an alternative, or is it somewhere in between?
I think they're a little bit of everything, and I think in the age of, Biden and Trump, you're seeing more unenrolled voters because people are sick of the extremes on both sides. Most people are in the middle, and it's the extremism that's a big turnoff to this political process. So I think that you're seeing people from the left, from the right, and frankly, people that just don't want to have a political label, and they're looking for, a fresh start, a different candidate that's going to bring an alternative to the table that's not Trump or Biden.
So talk to me about the narrative here, because I've been here for a few days, and I'm hearing that there's disappointment. Debates were canceled. Not all the networks showed up this time. I wonder if you think that feeds into a potentially lower turnout, but also the sense of inevitability. I thought New Hampshire was supposed to be the place that brought surprises.
Well, it is, but this is also a state where there's a lot of value in retail politics. Residents expect to see the candidates to be able to shake their hand, ask them questions.
And the front runner never even came here. Did a couple rallies.
Right, and is not doing the type of retail politicking that Granite Staters expect. Not to mention even President Biden. I mean, he hasn't stepped foot in the state since 22.
How about that?
So I think that but politics is also different now. I think it's not everybody's expecting to meet a candidate and spend time with them, but they're looking for someone that is going to talk to New Hampshire voters, that's going to show that, they have a new approach. And Granite Staters like to think for themselves. They don't like to be influenced by Washington.
So you don't think this is done, right? No one's counted a vote yet, and you've got people writing about the inevitable nomination of Donald Trump.
Sure. I mean, not only do Trump Republicans want to see a Trump nomination, but I think Democrats also want to see a Trump nomination, because I don't think President Biden wants to go up against a more moderate Republican like Nikki Haley.
Yeah. So you do think that is right, that the Biden camp thinks it can beat Donald Trump and would be at risk facing a Nikki Haley, because we've got swing state polling at Bloomberg, and we're not the only ones showing that Joe Biden might have a hard time beating Donald Trump, too.
Yeah, and it's, an unknown. Trump is a known quantity for Biden and for Democrats, and Nikki Haley is different, right? She's an alternative to what we've seen for the past 8 years.
How important is this Chris Sununu endorsement? We talked to the governor over the weekend, the most coveted endorsement in New Hampshire. Has it been a difference maker for her? This was supposed to be Nikki Haley country.
I think it's a good endorsement to have. Chris Sununu is a really popular governor, and again, he's appealing to not just Republicans, but he's been supported by voters on all sides. And I think that there's a trust in him in the Granite State that they do take what he says to heart. But, you know, it's really interesting, like how much clout does an endorsement hold these days is an interesting question. And I
really
think part
is.
of it is really just that New Hampshire voters like to think for themselves.
Yeah, right. We're spending time with Republican strategist Lizzie Guyton here on Bloomberg's Balance of Power. As I mentioned, you were a spokesperson for Governor Charlie Baker.
Yep.
At the time, the most popular governor in the United States of America. Many folks thought he might be the future of the party. How do we get this guy to run for president? But if you had done that, he wouldn't have been able to clear a primary. He may well have won a general election. So where does that say about where we are now versus 2016?
I think it's hard for any moderate in a primary setting, and I think that goes for both Republicans and Democrats.
Isn't that a problem for democracy?
I think it's a challenge, and I think, you know, even for a candidate like Nikki Haley, who, you know, is certainly looking to get some momentum here in New Hampshire to carry on, her margins should always expected to be tight in primaries because she is more of a moderate candidate than, you know, some would say Trump is, and then a conservative choice.
Where are you going to be looking tonight? You've helped to run a Senate campaign here in...
Governor Kasich did well, are ones to watch for Nikki Haley. And, you know, I know everyone's saying 801, but some of the bigger voting precincts will take a little bit more time to come in. And I think those will be, especially if there's good turnout and there's a lot of independents that go out and vote today, those are going to be where you're going to want to watch for Haley to have some good numbers.
Are you pushing us back on an early call? Do you think this might take a minute?
It might take a minute. I don't think we're going to be, you know,
maybe that's the surprise, if she's doing better than expected.
Yeah, just we got to wait for some of those bigger returns to come in New Hampshire, I would say.
You saw the Suffolk numbers I started with here. Trump's at 60% now. Do you believe it?
I think we got to give it the day. I think it's too early to make any conclusions.
I keep hearing New Hampshire people like messing with pollsters. That's why I ask you. They
well,
love...
Look, we also put a lot of stock in polls these days,
Sure.
you know, and I also would say we have to keep in mind in the past 7 days, the landscape of this primary has changed dramatically with Christie dropping out, Vivek, and then DeSantis. So even if we are leaning heavily on the polls, there hasn't been that much polling that's just a Haley-Trump matchup.
Yeah, that's true enough. And you wonder where those final DeSantis votes go. I think we know where the Christie votes went based on her trajectory recently. What a great pleasure to see you, Lizzie Guyton. Thank you so much for coming to talk to us at South and Hill Strategies, a firm that you co-founded, and I hope everything is well for you. Stay in touch with us here at Bloomberg. Absolutely. I'm Joe Matthew in Manchester, New Hampshire, and we do thank you for being with us here on Balance of Power, with a lot more to follow, including our conversation with Democratic presidential candidate Dean Phillips. It's next. This is Bloomberg.
Sports, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index now trading in the red. Russell 2000 as well. We begin there. The Russell 2000 down by 0.6%. Small cap shares moving lower. The Dow, the S&P, NASDAQ all retreating from records. Stocks, however, are trading in a narrow range ahead of a slew of company results that could offer insights about the state of the global economy. After the bell, of course, today we'll be hearing from Netflix. Right now, the S&P is down 2 points, drop there of just about 0.1%. The Dow lower by 167 points, drop there of 0.3%. And NASDAQ, the composite index, lower, little change, down 6 right now, a drop of less than 0.1%. 10-year yield 4.14% with a 2-year that is now yielding 4.40%. Spot gold higher, little changed, up $2 the ounce, up by about 0.1%. And West Texas Intermediate crude oil now lower by 0.4%, 74.44 barrel. Lots of earnings. Procter & Gamble shares up now by 4.6%. The maker of Bounty paper towels and Downy fabric softener reported quarterly sales that did fall short of estimates. Consumers, though, continue to buy fewer items amid higher prices, but P&G up now by 4.4%. Verizon Communications added new retail mobile customers for the first time after 3 down quarters.